once the monsoons come in and we see what's happening. At this point of time, this is our best forecast, which is mid-single digits. LCV momentum continues to be very good, as we've seen after the GST drop, and you're absolutely right that momentum is very strong. At this point of time, we are pegging it at high single digits. The reason being, we don't know what will happen depending on how much price increases are necessitated because of inflation over the next few months, and whether that may have a slowdown effect. But at this point of time, LCV is growing faster in double digits. But we've kind of assumed that there will be some price increase, and that may moderate demand.
Hello. Yeah, hi. If you can just provide some outlook for your complete CV portfolio for your pickups, LCV, and also your SML businesses. That is one. And second question, during the slide, explain Mahindra Finance is less than 5%.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m.
Welcome back. You're watching Ask Profit here at NDTV Profit. We were just talking about the Marico earnings, and the press release has also come out. Just to give viewers a perspective from that end, overall Q4 volume growth has stood at that 9% mark. For FY26, the volume growth has stood at 8%, which is the highest in 7 years. For international constant currency growth has been at 20% for FY26, which is the highest in 14 years. Overall, like I said, Q4 volume growth is at 9%. They've also gone ahead and given guidance. They've said they expect to sustain high single-digit volume growth in FY27, expect to deliver mid-teen constant currency growth in FY27, and this is in terms of the international business. Aim to achieve double-digit revenue growth and to cross 15,000 crores in FY27. Aspire high-teen EBITDA growth in FY27, subject to stable macros is what they've said. So this is the outlook that they've gone ahead and given in their presentation. And they've also, of course, talked about the raw material pricing and the way things have fared in terms of, West Asia conflict. But overall, the medium-term guidance is that they are accelerating towards a 20,000 plus top-line growth by 2030. That's the overall vision that they've, mentioned in their investor presentation that they've come out with, which is an important one to note, because they've gone ahead ahead and given a guidance, specific guidance of 20,000 crore by FY30 is what they are aiming at. So this is the overall view that we have on Marico. The stock, of course, did tank to almost 2.5%, but on the back of positive guidance, we're seeing that recovery in the counter coming in. There you go, beautiful recovery coming in the Marico charts. Now just trading around 0.9% lower, and probably as soon as these lines unfold, we'll see some recovery coming in the stock as well. Let's try to take a perspective from our guests as well. We're now joined by Radharaman Agrawal, who's the Managing Director and CEO of Swayam Capital, joining us now, and Gaurav Sharma, Associate VP and Head of Research at Globe Capital, joining us now. Welcome to both of you, gentlemen. Radharaman, your quick view, if you've had the chance to take a look at Marico earnings, what is the initial reading for the same?
The Marico anyways issues sales updates, so by and large that piece was anyways factored in. But I think good piece what we look at is the whole guidance. So we might have to deep dive and understand what guidance they are giving, but it seems positive in terms of growth, and by and large I think they have delivered a good set of numbers. So it looks positive for moving ahead, and the guidance seems very encouraging.
Absolutely. I mean, they've said that they're poised to deliver double-digit revenue CAGR by FY30, and 20,000 crore plus top line is what their vision is for FY30. So most certainly a positive one coming in for the fundamentals for sure. But Gaurav, any view on the charts for this one? There's again some tanking that we're seeing right now, but overall your view on the charts for Marico?
Hi, Mahima. Very good afternoon to you and to all the viewers of NDTV Profit. On chart, the stock is looking impressive. It has done well for itself in the past. Clearly outperformed many of the FMCG peers. Still, it is holding ground, trading close to its record highs. One should maintain a long position till the stock is trading above 740 levels. A level beyond 810 will take it towards 900 in the next 1 to 2 quarters.
That's the overall view coming in on Marico. The stock now seeing a downtick for around 1.8%. But let's start with all your stock-related queries. For viewers who are tuning in, you can either WhatsApp us or call us on the numbers that are flashing on your screen up there, and go ahead and ask all your stock-related queries. The first query that we have on the show is from Lalita, who's writing us from Hyderabad, asking about Suzlon. She's got around 1,008 shares at the levels of 39. Wants to know if she can go ahead and buy more from a slightly long-term perspective. Radharaman, would you recommend that?
She can maybe add to that extent. If you look at what has happened in the company, also what is moving out, so it makes sense to basically add to this extent, and she can add to the positions what she's holding on.
So that's the view coming in on Suzlon. The next one is on Sona Comstar. This is from Mahesh, who's writing us from Andhra Pradesh. He's got around 50 shares at the levels of 480. It says that he is already sitting on 19% of profits. Can he continue to hold this one from a long-term perspective, or should I maybe average at the current levels to continue to hold? I'll stick with you for this one. Radharaman, your view on Sona BLW?
I think he should hold on. He should not add at these levels, but from a medium to long-term perspective, I think he should continue holding the stock.
Okay. All right. The next one that we have is coming in, and this is on PNB. Our viewer wants to know if this is the right time to make an entry. Kiran from Bengaluru, by the way, is asking. Gaurav, your view on the charts for PNB, is this the right time to make an entry?
Otherwise, we are very much bullish on the PSU banking pack, including PNB, but this is not the perfect timing. I believe the stock would come down a little more. 100, 102 is a better price to add up to the position. At that point, he can consider adding up, taking a stop at 90, and then holding the stock for the next couple of, say, months or so. He can expect targets close to 130 odd levels.
Okay, all right. So that's the view coming in on PNB, but I think we've got a first caller for this afternoon edition. Anjali is calling us from Hyderabad. Anjali, a very good afternoon to you. Go ahead, ask your question.
Yeah, hi ma'am. Good afternoon to all of you.
Good afternoon.
Yeah, I'm having a lot of slabs of 400 quantity at 1050 average. So in the short term, what is the target?
Okay. All right. Okay, got your question. Sorry, Anjali, just to get things straight, you're looking at the charts while looking at Laurus Labs, or did you see the fundamentals of the company?
Charts only I looked at, ma'am.
Charts only you look at. Okay, all right. Gaurav, your view on Laurus Labs, where charts are concerned, she's already sitting on certain profits. Should she continue to hold?
Well, the stock came up with reasonable set of numbers on all fronts, top line, bottom line, margins, etc. The stock is doing good. It has done well in the past, trading at its lifetime highs. I think she should continue holding her position. Already she is in a 10% profit. Take a stop at somewhere around 1090 levels. Hold your position. Look for targets close to 1250 odd levels.
Okay, all right. The next one that we have is coming in on City Union Bank. This is from our viewer. Sorry, it's on Vikram Solar. From a long-term perspective, our viewer wants to know if a fresh entry makes sense right now or not. Gaurav, any view on the charts?
I'll suggest the viewer to wait for some more time. The stock is in a long-term downtrend. I do not see any meaningful signs of any reversal coming in. A break above 240 would likely take it towards 260 and higher levels. So wait for the breakout to happen, then only enter. Otherwise, just leave the stock. There are other more better stocks to invest in as far as solar is concerned. You can consider Vari from that. Renewable energy point of view, you can consider Suzlon.
Okay, all right. The next one that we have is from Satyan, who's asking about Shyam Metallic. He wants to know, yet again, a short-term question, whether he can go ahead and buy this from a short-term perspective, say for 1 month, for a return of around 5 to 8 odd % is what he's asking. Do you think that's possible on the charts for Shyam Metallic, Gaurav?
Yes, Mahima, this is pretty much possible, but buy on the breakout point, and that is 910 is a breakout level. Wait for some time, buy above 910, and you're looking at a profit of somewhere around 940 as the immediate target. Thereafter 960. Both these levels are possible in a 1 month's time frame.
Okay. By the way, viewers who are watching us, you can also call us on the numbers that are flashing on your screen up there. It will be flashing in a while, by the way. That's the WhatsApp number where, of course, you can go ahead and text us, but also call us on the number that will be flashing on your screen. There you go. That's the number where you can go ahead, call us, ask your query live. The next one that we have is on CESE. 10 shares bought at the levels of 156. Can I buy more from a long-term perspective is what Shashank is asking. Radharaman, your view on CESE?
I think it's a very positive stock. The development also which happened in the state of West Bengal also, I think that also have a positive rub-off. In fact, that's the reason I think the stock went up yesterday. But it's a good stock to own, and I think it's a good sector that I think the person can add.
All right, so that's the view on CESE. The next one is from Uma, who's writing us from Bengaluru, asking about data patterns. She's got around 6 shares and the buying price is 3870. And this question is directed towards you, Gaurav, specifically. She's saying that ask Gaurav that on the charts whether she can add more and based on the charts, at what price she can go ahead and average this counter. Do you think that's advisable? One thing, if yes, what should she do?
Firstly, I'll direct it to Uma here. Uma, the stock is trading in a strong uptrend. The uptrend is fairly strengthened up on back of strong volumes. Results are still awaited. I would prefer to wait and look into the results first. As of now, I'll suggest you to take a stop at a closing stop rather at 3850. Hold your position, and once the stock manages to go past 4,300 mark, you can start gradually adding it. So buy on the rise is what I'm suggesting.
Okay, all right. So that's the view on data patterns. The next one is on M&M. We just saw the earnings fine print of M&M, and Dr. Lavanya from Eluru is holding around 200 shares at the price of 3160. Wants to know the short-term target on this one. The stock currently is trading around 1.2% higher. Gaurav, your view on the charts, can she continue to hold? What should she do? Add more?
Absolutely. It is one of the strongest players in the Indian four-wheeler industry as of now. 3,300 is the immediate resistance that I'm looking at. This lies as to the confluence zone of 100 and 200 period exponential moving average. So certainly stock will face some kind of resistance around this zone. Once that is taken out, it will head towards 3,500 and higher levels. So hold and add above 3,300 is what I'm suggesting.
Aruna calling us from Vijayawada. Aruna, very good afternoon to you. What's your query about?
Yeah, very good afternoon to all of you, ma'am. Thanks for having my query. And I'm having CG Power, so I wanted to sell in the short term. So my average is at 680 to 100 quantity. So what is the target to sell?
Okay, got your question, Aruna. I'll take this up with Gaurav. Then Gaurav, she's looking at a short-term view on this one. She says she wants to know the right target price to exit the counter. And as far as the charts go, if I'm not wrong, there is a momentum that's picked up. Would you agree to that? And if yes, what should be the target price that she should continue to hold the counter for?
Absolutely. The stock is having good momentum here. A steep vertical rise from 640 to close to 840 levels seen in just about a month's time. Now it is all set to trade near its previous resistance mark, that is 875. So that happens to be the immediate target that I'm eyeing at. Again, the stock is due to come up with their numbers. So the viewers should keep a close eye on that, because that may lead to certain volatility. And if in that volatility, the stock rises up to 875, that is the point to take some profits off the table.
All right. Okay. We've got Jose who's calling us from Kerala. Very good afternoon to you, Jose. What's your query about?
Madam, I'm having 6,000 plus shares of civic industries. My average cost is about 34. I would like to know the prospects of this share.
You want to know if this will be a profitable position or not, correct?
Yeah.
Okay, all right. I'll take this up with Radharaman. It's trading at 20 rupees right now. It's a small counter. Any view on this one, Radharaman?
So difficult. I don't have any understanding of this company. So
Sure, I'm sure it's a very small counter to even track. But Gaurav, any view that you can probably give on the charts?
Even we have not tracked it that closely, but what I can sense is from the chart is that stock is in a very, very poor condition. It is in a long-term downtrend. I'll advise the viewer to get rid of the stock, utilize any bounce towards 22 levels to exit your position.
Okay, all right. So I hope that solves your query, Jose. The next one that we have is on LNT. Kohinoor is asking this question. Wants to know from a 3-year time horizon, what should be the outlook and probably an expectation of a target price. Radharaman, your view on this one?
I think LNT is a very good counter. The volatility which are going on is happening because of the crisis in the Gulf War. And I think with this getting sorted over a period of long term, the stock should give a very good result. And it's more of volatility which is happening in the Middle East. The stock has taken a beating, so I think it's a long-term very good buy.
Okay, the next one is from Kiran, who is writing us from Bengaluru, asking about a long-term view on Piramal Pharma. Would you recommend an entry into this one, Radharaman?
It seems like Piramal Pharma and ITC looks a better bet as compared to Piramal Pharma to that extent. So I would not like Piramal Pharma, but like to take a bet on ITC. I think that's a good stock to own right now.
All right, the next one that we have is on Colgate Palmolive. This is from a person who's writing us from Hyderabad. He's bought at the levels of 2171. 50 shares is what he's holding. Wants to know as to what should be the next course of action for him. Any view on the charts for this one, Gaurav? Colgate Palmolive?
You should hold on to the position, although the stock is trading just at the resistance point from its 200 period exponential moving average that is placed somewhere very close to 2200 odd levels. But I see the stock would come up with a breakout because a clear flag and pole pattern is also visible. Beyond 2200, the stock will very quickly hop towards 2300, 2350 zone. So that is some place where part booking is advisable. As of now, hold.
All right. Okay. So that's the view coming in on Colgate. We've got Mahesh on the phone line with us. Mahesh, a very good afternoon to you. Go ahead and ask your question.
Good afternoon, Mahima. I was holding Steel Strips Wheels India Limited at a quantity of 51, an average price 197. I would like to know the long-term view on that.
Okay. Radharaman, any view on Steel Strip Wheels?
It's a good company to hold on. In fact, he can make an additional purchase and maybe take it forward. So it's in a good shape. So I think he can add further to the positions.
All right, okay, so that's the view coming on steel tips. It's time for our rapid fire round. Gaurav as well as Adaraman, you both know the drill. Try to keep your answers as short as possible. The first one is on Ease My Trip. Our viewer has bought 500 shares at the levels of 12 rupees. It's currently trading at 8 rupees, has been averaging since 2024 end. Should he continue to hold? Adaraman, your view on this one?
Hold, no average.
Okay, the next one is on Tata Communication. Our viewer has bought at the levels of 1566, 278 shares is what he's holding. Hold or sell, Gaurav?
Hold with a stop at 1500, add above 1650.
Okay, Transrate Lighting, a 6 months view on this one on the charts, Gaurav?
Please come again with the stop's name.
Transrate Lighting, a 6 months view on the charts. It's down 2% as we speak.
Right. Hold, the stock is at supports, add above 620.
Okay, Cupid trading at 129 today. Is this the right time to enter from a long-term perspective? Radharaman, any view?
Yes, it's a good stock to.
Okay, Siemens Energy or Vari, which one is better from a charts perspective and what should be the entry price? Our viewer is asking, Prashant from Bengaluru, by the way, is asking this question to you, Gaurav.
Yes, just a second. I think I'll go with Vari.
Okay. And what should be the entry price?
Current market price.
Okay, all right. The next one is on HDFC Bank. Our viewer has entered into this counter for 25 shares. Wants to know if he can continue to hold this from a long-term perspective. Radharaman, your view?
No, he should sell.
Yes Bank is the other one. Amit wants to know from a long-term perspective if he can continue to hold this counter. Would you recommend that, Radharaman?
Yes, well, he can hold, but not HDFC Bank.
Okay, the other one is on IT Pack. TCS, Infosys, Coforge is what Shiv Kumar from Bengaluru has been holding in his portfolio. He says he's sitting on loss on all of three of them. Should he continue to hold? Radharaman, your view?
I think he should hold the pack.
Okay, the next one is on Emcure Pharmaceuticals. Is this the right time to enter? We just saw the earnings flashing. But Gaurav, any view on the charts?
Stock is looking good. Yes, any dips from these levels should be a good buying opportunity. Preferred level would be close to 1600.
Okay, Ashok Leyland, 102 shares bought at an average price of 181. Hold, sell, average on the charts, Gaurav?
Reduce.
Okay, the next one is on Aarti Industries. Considering that we've seen the tanking in the counter today, is this a good time to make an entry from a long-term perspective, Radharaman?
Yeah, it's a good time to add.
Okay, Grow is the other one where our viewer has bought 1800 shares at an average price of 148. Can he continue to hold from a long-term perspective? This is Vijay Kishore from Hyderabad who's asking. Your view on this, Radharaman?
He should hold.
NTPC is the other one, 187 shares bought at the levels of 357. Short to medium-term outlook on this one. Hold or book profits? Raja from Chennai wants to know. Gaurav?
I think you should hold on to the position. Stock has potential to scale up to 420, 440 odd levels.
All right, that brings us to the end of this round of rapid fire as well as Ask Profit. Gaurav as well as Radharaman, thank you so much for taking out the time and helping us answer all those stock-related queries. Viewers, like I said, completely out of time in this edition of Ask Profit, but do stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp. 8:30 p.m. only on NDTV Profit. 8:30 p.m. only on NDTV Profit.
Hello and welcome to NDTV Profit. You're watching India Market Close, and it has been a tug of war between the bulls and the bears. That's what the markets are indicating. I'm Hiral Dadia. Here we will be dissecting the key market trends, and we'll set the stage for what's to come tomorrow as well. But very quickly, just look at what Nifty 50 has done. We're seeing cuts of around 0.3% right now, but the recovery from the day's lowest levels is pretty strong, and that's what we're seeing in terms of Bank Nifty as well. The clear part over here is that we are above the 24,000 mark on Nifty 50, so we're not breaking the support levels in terms of Nifty 50. Apart from that, if you see in terms of Bank Nifty as well, a very similar trend. We're just seeing cuts of around 0.2% coming in there. If you look at broader markets, there is that positive trend coming in there, so that buying is emerging when you talk about the small and the mid cap index. If you pull up mid cap 150, 0.1% higher. Let's just pull up the intraday chart. You'll see the kind of volatility that has come in as well. From the day's lows, good recovery, but we're trying to sustain on the green line right now. In terms of the small cap index as well, a very similar chart. We're pretty much on the borderline, trading flat, but there is that buying which is emerging at lower levels. And today is F&O expiry, so you are going to see these kind of gyrations that could be coming in as well. Let's quickly look at the heat map and then we look at the advanced decline ratio as well. If you see in terms of the Nifty 50 heat map, you have names like, you can't say it's a 50-50, it's more of reds versus greens, where Ultratech is the top gainer today from the cement pack. And last couple of days, we have been talking about the cement price hikes that could be on the cards as well. M&M reacting to where numbers are concerned. Nestle, Hindalco, Grasim, HDFC Life, these are a few of the names which are providing support. In fact, it's mainly IT and telecom which is slightly resilient in terms of sectors today, but major pressure building in. If you look at a Geo Financial Services, Coal India, Eternal, L&T, in fact, ahead of numbers, you have L&T, which is trading under pressure. You have a Hero Moto also that will be reporting numbers post-market. So, that one is also pretty much on the tender hooks, but there is no particular trend that we are seeing right now. Let's look at the advanced decline ratio and then we'll move on to the sectoral heat map as well. If you see in terms of the advanced decline ratio from where we started off, the gap actually widened midday and again it has started to narrow, and it's nearly 1100 advances to almost 1400 to 1500 declines coming in there. So it's pretty much even Stevens, not too much of a gap that exists between advances and declines. Let's quickly look at the sectoral heat map as well and then we'll see where is that resilience. There you go. Defense, the top gainer today. FMCG, as we mentioned. Auto, seeing some respite along with metals, but real estate, the top losing sector, and it's mainly Godrej Properties, which is pulling the real estate sector down in trade. Consumer durables, oil and gas for obvious reasons. You have Brent, which has actually crossed that $110 per barrel mark, and that's what is putting pressure in today's day of trade. And you have the Rupee, which is playing spoiled sport. So that's what we're watching out for in terms of where markets are concerned right now. Let's quickly look at the factors one should be watching out for in today's day of trade. If you see in terms of where Nifty goes, support at around 23,900 is what it's seeing. Now, this support level is not broken, which is the key positive, and we've seen a recovery of nearly 100 points from the day's lowest levels. The markets are actually, stuck in a tug of war. That's what I told you in between. The positive election sentiment and the persistent global pressure that is coming in the form of the war. And you have the Rupee, which has actually hit an all-time low. 95.42 is what you're tracking in terms of the Indian Rupee, along with crude that has breached $110 per barrel, currently at around $113 per barrel. Nifty is actually hovering around its 50 DMA, and the critical support level is coming in at 23,900 and 23,800. If 23,900 is broken, you will be watching out for 23,800 on the charts, and below that there could be some bit of selling pressure that could exaggerate as well. Overall, it's a 500-point range that you're talking about, 24,300 to 23,800 on the downside, and this is for the last 7 trading sessions where you're seeing Nifty actually trade in this kind of a range. Only if Nifty closes above 24,300, it could trigger a short covering rally towards 24,600 to 24,800. So I think that's what the markets are watching out for. Lastly, if you have to look at Bank Nifty as well, that is also technically weaker in terms of its formation as compared to Nifty 50 because it's trading below the key moving averages. So unless Bank Nifty actually reclaims that 55,500 mark, the bias will remain sideways to negative in terms of Bank Nifty, and you should be watching out for support levels of 54,000, whereas resistance on the upside is coming in at levels of 55,000. And lastly, value buying in the small and mid cap space is what you're seeing. You have defenses like pharma and FMCG, as we mentioned, are holding out. Banks and real estate, these are the sectors which are dragging the most. So that's what the setup is looking like. But let's get in our guests. We have Vinay Rajani of HDFC Securities and Sunny Agarwal of SBI Securities joining in. Welcome to the show, gentlemen. Always a pleasure to speak to you. Vinay, my first question coming to you is, with the kind of trend that we are seeing and the recovery that's coming from the day's lows in terms of markets, what should that closing strategy be in terms of levels to watch out for and your top picks?
Yeah, so as you have been discussing that Nifty is over into a range, and for last 7 trading sessions, Nifty has been showing some alternating moves like one day up and one day down, and there is no clear-cut momentum on the upside. 24,300 on the downside, 23,800. So 500 points more consolidation is there. We are waiting for the momentum to come back. Once this range is taken out, then we can expect that momentum to come back into the markets. But yes, primary trend is still positive because broader markets have been performing very well. The small cap and the micro cap indices have been performing good. They are still holding their levels at the higher levels. So there is a consolidation in benchmark index, but broader market indices have been doing good. So stock specific opportunities, trading opportunities are still there in the market. So we have to be very stock specific. We are also passing through the result season, so a lot depends on that. So as of now, we are asking our traders to keep a stop loss at 23,800 and keep on holding the long position. Once we see a breakout about 24,300, then we can immediately see a 200 days exponential average coming up for the Nifty, which is placed around 24,750. So yes, with a positive bias, one can trade. Yes, definitely it look the sector which is performing well. You have to select the stock, but overall it is the typical choppy market where stock specific bullish moves cannot be ruled out.
Okay, so that's with regards to strategy on Nifty and Bank Nifty. Vinay, what would your top picks be at this hour if you have to look at, NSE Nifty expiry today and probably the kind of impact one should be watching out for from the global aspect as well?
Yeah, so financials have been doing good today. The NBFCs, the L&T Finance is one of the stock which is showing a good traction today. So flat kind of breakout can be seen on the technical charts. So around 291, one can go long, one can keep a trading stop loss at 285 on the upside. I'm expecting a target of 300. The second stock I like is from the power and the ancillary scheme, that is CG Power. So CG Power is almost similar kind of setup like LTF. So after some running correction, it has reduced upward rally. So today is up by more than 2% with a good volumes. So around 829 CG Power, one can go long. Stop loss can be kept at 812 for the traders. On the upside, I'm expecting an immediate target at 860. So one from the power space and another from the NBFC space.
Okay, so and power has been in focus as well. In fact, a lot of positive commentary that's coming in when it comes to power, and it can be from the renewable space as well. And on the back of which, in fact, the commentary from the management of Coal India as well was absolutely positive because they are looking at thermal power as a segment. Coal gasification is something that they are betting big on in trade as well. In fact, Sunny, let me come to you. We've been talking about the way markets have been playing a tug of war. In the last, 5 to 7 sessions, it's been a very broad range where markets have been trading at. The question is, should you start nibbling in or not at this juncture? Because if you, I don't know if it would be right to say that, the troubles are behind us. But at this point in time where majority of your, Nifty 50 companies have reported numbers, you have some bit of visibility in terms of the broader market's earnings as well, and what you could expect in the first quarter. How are you looking at it, and anything that you would bet big on right now?
Good afternoon. I think if you look at the market texture of the last 2 weeks, market has not been reacting very sharply to a negative development, whether it is on rupee front or crude front, and that gives us a lot of confidence that Street is now working with an assumption that crude is likely to remain at an higher level for maybe a month or two, and till the time, and at the same time there can be an pressure on USD INR, and to that extent we have not seen a very aggressive outflow from foreign institutional investors. At the same time, market has been consolidating in a broader range of 700-800 points of Nifty, and on the top of that, in terms of earning, what we are seeing is that a few sectors or few companies are reporting a very solid set of numbers, although we all are aware that in case the crude oil sustain at a higher level, maybe 1Q is a quarter where we may see some margin pressure going forward. But having said that, if you look at a slightly longer picture, larger picture, maybe FY27 is a year where we may see 15 to 17% kind of growth on Nifty 50 as a constituent, and then FY28 again kind of mid-10, 13 to 14% kind of growth on Nifty 50 earnings. So I think valuations are comfortable, although there is some overhang in terms of rupee or crude oil prices. But what we feel is that it's the right time to add a few select names in the portfolio. So just to give color on that, I think financial services is the one space especially NBFC, where we feel there can be a good opportunity to add to the portfolio.
Okay, so financials come in on Sunny's list as well, along with Vinay. But moving on, it's that time where we do a stock of the day. And to your surprise, we've picked up a CAMS, and this is after a sturdy fourth quarter that the company has posted. The stock also at the day's highest levels with gains of 9% coming in there. Jasmeet is here with us to tell us more in terms of what is really working for a CAMS in this quarter, what that outlook could look like in terms of FY27. Jasmeet, over to you.
Well, thank you for that. Company came out with its Q4 earnings. So now what we see is the company posted its highest ever quarterly revenue when you look at the Q4, and it's posted its highest ever EBITDA in all-time history of the particular counter. Now, what helped the company achieve this is overall efficiency in terms of the operations. Well, the margins improved on the back of that automation and the re-engineering the company has been doing to its model to reduce the cost, help the margins to expand. While if you look at the overall non-mutual fund business, the smaller chunk of the revenue, even that grew faster compared to the mutual fund business, where it's currently contributing nearly 15% versus 13% in the previous year, same quarter. Now, if you look at the other highlight, we also make a note that the overall live SIPs for this particular counter expanded way faster in the industry, where we see the overall growth for SIPs came in at nearly 17%, while the industry grew at 4%. Now, if you look at the last key aspect, what we make a note, the brokerages have been bullish on this particular counter, and company also has added 2 new clients in this particular quarter, which adding to the overall revenue momentum. Now, if we look at the key numbers, the revenue is up by 11%, while the overall EBITDA also expanded by nearly 160 basis in terms of margin. In terms of the EBITDA levels, it's nearly 15%, while overall profit also saw healthy growth. Now, if you look at the key brokerages, now what they're penciling is something like a Jefferies has come out with a brokerage note, while they maintain buy on this particular counter with a target price of ₹820, and they see upside of 12% from here on. This is before the spike we saw in the stock of nearly 9%. Now, what they see is they see overall revenue and PAT has come in line with the estimates, what they were expecting. Further, they also make a note that the expensive has grown slow for the management, showing the overall operation efficiency. Now, well, we also have Investec on this particular counter. Now, what they notice, they maintain buy on this particular counter, and also they maintain hold on this counter where the target price of ₹775 and expect an upside of nearly 7.2%. They say the overall mutual fund, that's the main business of the company, sees slight decline, which is down about 0.4% QOQ basis. Further, they also make a note that the guidance in the coming year remains a key by the management of how they see FY27 growing ahead. Well, look at the key valuation of this particular counter. They are nearly at 40 odd times cheaper than the competitor KFinTech. But given the non-mutual fund business is growing faster for the company, we can expect it to pick up. Now, if you look at the overall buy rating for this particular counter, stands at 18 or with the return potential of 3.5%, which comes in after the spike of today.
Thank you so much for that, and this puts a lot of things into perspective. Sunny, what would you do with a CAMS with the 8.5% up move that has already come in there? Do you think this is something which could be sustainable from here on with the commentary that we've heard from the earnings as well?
Yeah, I think maybe buy on dip is the right strategy, as rightly pointed out that non-mutual fund business which is one of the key growth catalysts going forward. And again, on mutual fund side, I believe that in case there is an improvement in market sentiment going forward, even mutual fund business should start delivering slightly better growth going forward. So maybe buy on dip is the right strategy with a fair value of closer to 850 to 900 and investment horizon of 6 to 12 months.
So that's with regards to where CAMS goes. But moving on, sources tell NDTV Profit that country's largest private sector lender may see a new chairman appointment in June. People privy to the developments say that Keki Mistry is unlikely to continue as interim chairman of HDFC Bank. Shrimi is here with more details on it. Shrimi, this is one of the hottest discussion points right now when it comes to HDFC Bank, because a lot of expectation was that probably, because Keki Mistry has come in as interim chairman, when the reappointment has to happen, it could be a probability that he gets an extension. But that's unlikely, it seems.
Yeah, that's right, Hiral. What we gathered so far is that, of course, the bank is going to see the new chairman mostly by mid of June or by end of June is what indication we are getting. And this is coming clearly at the time when Keki Mistry tenure as an interim chairman is ending next month, to be precise, on June 18th or 19th. And his reappointment is unlikely. The exact reason, however, is not known. But what indication we are getting at this point point that since he's been associated with bank for a very long time, and this could possibly lead to the conflict of interest, and that is why he could not get the full term as chairman. And in fact, the lender is in touch with RBI on the board restructuring, and what we've been given to understand that in fact some of the option is being explored at the lenders level, whether to kind of elevate one of the existing board member as chairman, or to get some external candidate on board as for this role. So clearly it's important, because what we also gathering at this point that in fact the senior RBI official is visiting senior board members every 2 to 3 weeks since the Atanu Chakravarti abrupt resignation to take a stock on the succession planning, to entire board restructuring and the governance as well. The another key important information we gathered at this point that the two external law firm is expected to submit its report in next 2 weeks, and that is going to shape the lender's next move. And we reached out to HDFC Bank for their comment, but we're still awaiting reply.
Okay, so this is going to be an interesting development, Shrimi, that we should be watching out for. Thank you for that. Stay with us, but let's also listen in to what former HDFC chairman Deepak Parekh had to say on the lines of his role at HDFC.
Are you talking of HDFC Bank? Yes, I have nothing to do with HDFC Bank. I've retired. I'm not on the board. So I can't say anything about it. Except that you must read the Reserve Bank of India statement that the bank is strong, well capitalized, and there are no ethical issues.
So that's the comment coming in there. In fact, the stock has also recovered from the day's lowest levels. But that Shrimi is with us still. Shrimi, the other story that you've been tracking is with regards to the Union Cabinet that is likely to clear a large credit support program today to help sectors which have been impacted by geopolitical disruptions. What are you picking up?
Yeah, Hiral, so we were the first one to actually, put out that story that government is rolling out a massive relief package for MSME. And in fact, that was in line with the credit guarantee scheme, which was announced by the government during the pandemic era. And this time it's 2.5 lakh crore. What is different this time is that they give a separate window for aviation sector, because the sector has been grappling with a lot of issues, right from the fuel cost increase, the flight cuts, and the insurance premium, etc. So you will see a separate window with an outlay of 5,000 crore. And if you see the nuances this time under this broader framework of emergency credit line, as far as aviation is concerned, that they are going to get 90% of the government backing loan, with individual carriers potentially getting up to 1,000 crore, which could be extended up to 500 crore as well, matching with the promoter investment. However, we need to see the fine prints of this scheme after the announcement. But this is the proposal prepared by Department of Financial Services, and it's going to be tabled in the upcoming cabinet meeting scheduled at 5 p.m. today. And we will perhaps hear from the briefing as well to understand the more of it. But this is coming to soften the blow as far as all those sectors, including MSMEs, are concerned amid this Iran conflict.
Okay, so a 2.5 lakh crore credit line that could be on the cards. Thank you, Shrimi, for that. In fact, updates will be, welcome on this one by exporters and importers, because anything that is coming in, it's a supply chain constraint that importers have been facing right now. But shifting conversations to Rupee, which has hit record low, it's interesting to see with what's happening. It's back again to those levels in spite of that RBI intervention that has kept coming in. 95.36 is what you're tracking right now. And India Banerjee coming in from Kotak Securities joining in. And India, welcome to the show. Always a pleasure to speak to you. This is Hiral here. My question is, what is happening right now in terms of the Indian rupee? I mean, the idea was that probably the record low levels will be arrested at some point in time. But time and again, we are bouncing back to those levels. What are you picking up?
Thank you for having me. A very good afternoon. Actually the entire play is on Hormuz and what's happening with West Asia. Because over the past 2 months and I would say first week of May. The situation in Hormuz has not improved. The oil prices continues to move higher, and that exerts a dual pressure on the rupee. First, it is through the current account, the oil import bill, which is roughly around 10 to $11 billion before the war. Now it has increased significantly because of the jump in the oil prices. And secondly, the FPI outflows, which is almost like $21 billion over the past 2 months. So the dual hit of current account and capital account is causing this depreciation. It is only the RBI intervention which they are doing aggressively. It's when the Indian rupee is stabilizing.
Okay, so Anindya, clearly, the RBI has been intervening in the spot as well as if you talk about the forward markets to curb this extreme volatility. However, with all of that, are you expecting any further downside pressure on the rupee with what's happening? Because there is no resolution in sight as of now, right? I mean, Brent, again, even if it comes down, it's back again above the $110 right now. So how are you looking at it? What levels would you be tracking?
See, as of now, the situation is that the oil prices can continue to rise because the supplies have not improved. 10 to 12% of the daily supplies of oil are offline, apart from the other things like gas and things like that. So Indian rupee will continue to be under pressure because it's a reflexive trade. And we can continue to see outflows of the FPIs, which mean RBI has to be quite aggressive on intervention. In spite of that, we won't be surprised to see 97 to 97.5 on the USD INR if we don't get a solution in West Asia over the next 1 to 2 weeks.
Okay, so interesting levels to watch out for. Thank you so much, Anindya, for joining in. Always a pleasure to speak to you and get your views. But very quickly, let's just look at a couple of losers. A Tech Mahindra, Eternal, Coal India, ICICI Bank. Top 3 to 4 losers that we are watching out for in terms of trade. Vinay, any strategy with these companies?
Yeah, so Coal India is relatively stronger. No doubt in last 3 sessions, we have seen some profit booking. The primary trend of this particular company is quite strong, and one of the outperformer we can say is, and overall we are bullish on the metal and mining space. So this is looking like a correction, but ICICI Bank and Tech Mahindra have been into a downtrend, and the sector, the IT sector has been underperforming. So that will be continue to be there as a headwind for the company. So ICICI Bank has been into a downtrend and has seen a healthy correction, but there is no sign of recovery as can be seen on the charts. So better to stay away from it and wait for some consolidation to happen. So Coal India is looking stronger, and buy on dip should be the view.
So ICICI Bank, Coal India, 2 companies you're watching out for. Sunny, any view when it comes to a HDFC Bank? We just heard our colleague Shrimi as well, who got us the story that there's a potential where KK Mistry may not get an extension as well, and they would be looking at someone internally from the board. With the way everything's panned out in terms of earnings, the change of guard that could be happening as well on that front, how are you looking at HDFC Bank?
Yeah, I think leadership change is something which has been an issue with an HDFC Bank. But coming to the core earning front, it seems that FY27 is the year where bank may report credit growth in line with an industry, and then in FY28 may exceed the industry growth rate. So I think next 2 years seems to be pretty good for an HDFC Bank, and the main key positive point is the valuation at which HDFC Bank is trading at a multi-decadal low valuation, so offer a lot of comfort on the risk side, so favorable risk reward ratio. So we believe the fair value of the HDFC Bank is in the band of 1,000 to 1,100 rupees with an investment horizon of 12 to 18 months. So I think it's a good time to accumulate HDFC Bank from a medium to long term perspective.
Okay. So the action today, though, in the broader markets more than anything else, the bank Nifty, by the way, one of the worst performers, about 0.5% down right now. Nifty is still looking slightly better. But let me go across to Somit Sarkar, joining us this afternoon with everything he is hearing on the street. Somit, is worry overshadowing any kind of euphoria or comfort in the markets right now?
Well, yes, if you look at the market, it has been quite range bound, and that is what dealers are indicating, that it will continue to remain range bound. This 500 points tight range that we are looking at, 23,800 to 24,300, it will continue to remain in that range until and unless we get some clarity on the geopolitical issue, given the fact that both crude and rupee have been impacting the Indian economy, and that will continue to impact until and unless Nifty moves above the 24,300 level decisively. Dealers are not expecting any big move on the markets going forward. Few stocks that dealers have highlighted in trade. Firstly, Gopal Snacks. They are clearly indicating that there are buy flows on the large HNI desk. The stock has been gaining for the last couple of trading sessions. Strong Q4 numbers is what dealing rooms are indicating. For Titan and Britannia, there are sell flows on the PMS desk. Dealers expect weak Q4 numbers from both the names in trade. And when it comes to few cash stocks, basically Prime Focus, Godfrey Phillips and Inox, and in fact Godfrey and Inox are in FNO as well. Prime Focus is predominantly a cash counter. Prominent HNIs have been accumulating these counters in trade today. So keep an eye out for these names in trade. And lastly, when it comes to Eternal, that stock has been down in trade, but dealers are indicating that there are some buy flows that they're seeing at lower levels on the FI desk. Long only funds have been accumulating Eternal at lower levels in trade is what dealers have indicated.
So Amit, thank you for that. We'll take a very short break, quick market check before we get into that short break. And you're seeing at least 24,000 being preserved on the Nifty, but looking very, very tenuous right now. Shaky day for markets. What should be your closing trade? All of that coming back on the other side.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit.
Welcome back. All right, focus in West Bengal. Political change in Bengal also raises questions on business confidence and economic expectations. NDTV Profit, the only business news channel who's getting you ground reports on how industry is looking at the political change. Our colleague Sharad Dubey in conversation with MD and CEO of UCO Bank, Ashwini Kumar. Listen in.
We are joined in by Ashwini Kumar. He is the Managing Director and the CEO of UCO Bank. An interesting snippet about UCO Bank is it's the only government company which is headquartered in Kolkata, West Bengal, you could say the eastern region. Good afternoon, Ashwini ji. First question is definitely going to be on the business sentiment, how things are there. I know you have corporate books also in eastern India. How's the sentiment looking like for this region?
Thank you. In Eastern India, we are the only bank having headquarters, that is true. And we have around 30% branches in the eastern part of the country and 6% branches are approximately in that northeast part only. So when we talk Eastern India, so we have around 30 plus 6, 36%. And these branches are contributing good business to the entire book of the bank. As far as sentiment is concerned, there's a good sentiment. I have to look back my previous year performance in eastern part of the country. So my MSME book growth on an average was 20% as a whole on a country as a whole. But each eastern part of the country, the MSME book growth was more than the national average. So that is one point. Second, similarly in retail also. And the contribution from the eastern part has been significant. Given a situation currently the environment is, I believe that our bank is going to be benefited with the new environment coming, new government coming, and the policy changes are likely to be coming, and the government initiatives, central government has been giving a lot of initiatives, lot of support to the business. So I expect that eastern part of the country to help the bank in growing business book in the coming years.
Well, so it's beneficial for the company as well as the bank and the industries which are there in Eastern India. That's a very important statement coming from you. But let's focus a little bit on the Q4 numbers also. I was just checking the numbers. There is a little bit of degrowth on a year-on-year basis. The question remains is, when will the yields pick up?
See, NI degrowth or the marginal growth was basically because of the base effect. Last year when we closed our book, that time there was a one-off item, 283 crore of interest income which was booked. That came from a TWO account. So that increased our net interest income last year. If we neutralize that, our growth is more than 6 to 7% in NI. And from advances, if we because interest income is coming from advances and from investment. So if we remove it from the advances base effect, then our NI growth from advances is more than 10%. So that was one impact.
I want to start off with you completing 5 years at M&M, and I know you are very modest in saying that the group did very well before you and it will continue to do well irrespective of you. But what you've done over the 5 years is landmark. I was talking to your team, highest revenue share in SUVs, highest revenue share in PVs, bunch of other things turning around. You must be happy with the results.
I am very happy with the results, but more importantly, it is the group that has done everything. It is the people that have done everything. Yeah. And it's a group with a wonderful culture, with a great set of people. And that's really been the highlight of the journey from my standpoint, is the values of the group, the trust that we have, and that enables everything else. And we always say that we will focus on our values and our purpose, and profits will follow. And profits have followed.
That's true. Profits have followed, ROEs have followed, EBITDA growth has followed. In some sense, when I look at the quantum of FI investments across various companies, etc., in your case, the downtick also has been minimal, if you will, right? In some sense. So all of that is great. Before I talk about the quarter, just one more thing. You're setting the bar higher with every passing year on multiple metrics of interest to financial investors. Right? You said 18% ROE, you kind of gone beyond that as well. What is in store for FY 27, 28, 29 or whatever year number of targets you want to give?
So we have given a target of 18% ROE and we had said 15 to 20% EPS growth. In the last 5 years, we've delivered 57% annualized EPS growth. And as I look forward, yes, we will continue to raise the bar. Our businesses are performing at a very high level right now. In terms of ROE, our investors would not want us to go more than 18% because we are putting capital back in for growth. And yes, we are at 20% right now, but I've always maintained we will be slightly higher or lower than 18% as we continue our growth journey. And that's the more important part. It's about each of our businesses becoming large businesses. And many are on a very strong path to do that. And that's what is a highlight of this year in particular, where many businesses have had a breakthrough year. And all our businesses have contributed to the growth for this year. So for me, it is about, as a leader, ensuring we have a higher threshold that we set every time. And the teams have responded very well to that, and that's what we will continue to do.
Okay, maybe get into the minutiae a bit and then I'll ask you about the investments as well, because with the kind of oodles of cash that you have, you may be able to do capex, invest in the business without having to raise a dime from the external markets, and I'll come to that also. But first, the performance. SUVs did well, and essentially the PV segment has done well, save for maybe one. If I want to pick, I can pick April mein kya hua, etc. and stuff like that. But by and large, FY26, that segment has done very well. Tractors, fabulous FY26. Are you guiding to that single-digit growth because of a high base, or is it that the market is looking skittish because of the monsoon? And then I'll kind of weed into the other business.
I think it's some aspect due to monsoon at this point. If the monsoon fears are not there, it will likely grow faster. We saw April grow very well for the tractor industry. But that said, the tractor industry has always had a mind of its own. And no one's been able to really predict what happens.
Okay.
So we will continue to see some challenge on that front. But on a conservative basis, we feel that it will be likely mid-single digit at this point.
Okay. And what about car, I mean, the PV SUV market? How is that looking? Because the GST benefits would have helped as well, I presume, to an extent at some point of time that base will catch in at a point of time when a lot of people will argue that some high frequency indicators are indicating to some moderation in demand across because of the conflict.
The PV industry has grown relatively slowly for the past many years. And we think that pace will pick up now. But for us, more important is M&M growth has been at a very strong pace. And even for this year, despite possibly a slightly conservative PV industry growth forecast that we would have, we would expect our SUVs to grow mid to high teens.
Okay.
As we said last year, we closed the year at a 20% growth year over year. And this year again, we expect mid to high teens in terms of growth rate.
Non-SUV?
Non-SUV will depend on the industry growth rate, because in tractors we have a 44% share. In LCVs we have a 52% share. So it's difficult to grow much faster than industry in that case. So there, with tractors at a mid-single digit, LCVs at a high single digit, we are hoping that with market share gains, we would grow faster than that.
Okay. Is it also a good problem to have? Because I think from what my colleague Puneet tells me, that a large capacity increase comes in Nagpur in 2028, if I'm not wrong, right?
Yes.
So, and you are already operating at fairly high utilization levels. So
we are putting more capacity in right now as well, both for ICE and for EV.
Right.
So we are essentially in line with the growth that we see.
Okay.
And with Nagpur coming in and our range of subcompact SUVs coming in, we'd expect a further inflection point in growth at that point.
Okay. Okay. Let me rephrase my question, Dr. Shah, that if indeed, hopefully this conflict ends soon, and if indeed the consumer sentiment were to change for the better, and if demand really zooms ahead as well, would you be able to cater to that demand with your existing capacities as they stand right now until your major capacities come on stream?
For the most part, yes. But then if it grows much faster, being at 100% capacity utilization,
exactly,
in a space where we more than quadruple capacity is not a bad place to be.
Yeah, but as I said, in that sense. Okay, fair call. A word on some of the allied businesses as well. Of course, the gems of growth, one, Tech Mahindra, and you told me the last time that you had given Mohit Joshi a target. They are living up to it and beating it by a margin. But the space is looking slightly skittish. The investor interest is not necessarily at the top shape right now. How does tech behave over the next 12 months, you reckon?
So I'll cover tech and then I'll go back to your broader question on all our businesses. TechM's on a strong path right now. We've got a good team in place. We've made the transition to centralized delivery and it's being received very well by customers. Our customer satisfaction scores have gone up significantly. From a financial standpoint, we're delivering everything we said we would, and we're therefore on track to meet our F27 targets. As that's done, we will come out with a set of targets for the next few years, which will point towards a greater acceleration of growth from our standpoint, and therefore tech business is in good shape right now. And let me come back to all businesses. We always talk about auto and farm, and rightly so, they have done very well. But as we look at F26 overall for the year, our profits have grown 35% year over year. Auto has grown 33% and farm has grown 13%. Strong domestic, but international, we had to do a lot of cleanup, and impairments of international got farmed down. So other businesses have contributed to drive an overall growth of 35%. Our growth gems have grown 50% year over year from a profit standpoint. Mahindra Finance has grown 60% year over year from a profit standpoint, excluding the provision release we had in the previous year. And Techem has grown 14% year over year from a profit standpoint. So we see all businesses really contributing at a very high level and driving the Mahindra Group forward.
It seems to be a period of uncertainty, if not the whole of FY27, then at least the current period, which may last for a month, 3 months, 6 months, we don't know. You've been a growth-focused leader. Do you continue that focus on growth, or is it time to batten down the hatches and prepare for a storm or something like that kind of a scenario?
So our theme right now is accelerate in uncertainty.
How?
And because of the foundation we have. And we've seen uncertainty over the past few months as well. We closed fourth quarter with a 42% jump in profits after tax. And our teams have gotten very strong at being able to manage through supply chain disruptions. The level of resilience that has been built is very strong. COVID gave us some very valuable lessons that we've learned and been able to address many of those. And a strong cash position, very strong set of leaders and teams, very strong set of businesses, positions us very well right now. So for us, it's not about battening the hatches. It's about being aggressive and moving forward in uncertain times. I will add to that the India story.
Please.
This is one that often is sometimes dismissed or maybe underappreciated. But India has a very strong growth trajectory, driven by consumption, by infrastructure, both physical and digital, that has been put into place and is being put in place, and by economic reforms that we've seen. Our businesses operate in 70% of India's GDP today. And across our businesses, we're starting to see the impact of that. If India grows at a mere 6.4%, and I say mere because we do expect India to grow at 8% for the next few years. But at 6.4, India will go from 4.2 trillion today to 6.6 trillion, literally adding 2.4 trillion of GDP, a 50% growth in India's GDP in 5 years. If India does grow at 8%, we will go from 4.2 to 7.1 trillion, adding nearly 3 trillion more, or 70 to 75% higher GDP in just 5 years. And that is a very powerful tailwind that we have. So we've got to take advantage of that tailwind. We've got FTAs that have been signed for 38, now 39 countries. And that's a huge advantage that we have to be able to export to those countries. We have to invest more in R&D. We've got to make our products a lot more competitive across the world. That's what we're doing in multiple sectors that we're in. And as we do that, we just see huge opportunity to take advantage of the tailwinds that India offers and the ability for companies to be competitive and play across the world.
Okay, I know you're pressed for time, so therefore I'll kind of squeeze in 2 questions in one, if you will, because both Puneet and Swati told me that you're spending disproportionate amount of time, maybe not disproportionate, maybe the required amount of time on AI as well. Some of your business get impacted because of AI or maybe benefit out of AI. But just broadly, I'll tell you what I hear from investors, right? And I would love to know your thoughts here, because you spoke about India and the India story. The common parlance or the common measure right now is that because India doesn't have AI, it's a story where global investors do not want to invest. Therefore, capital would be scarce. We're seeing multiple thousand crores being removed every day from the Indian markets as well, putting pressure on the currency as well. You are a thought leader. Put this into perspective for us, Dr. Shah. How do you see this pie unraveling? Do you reckon that if the AI spends on capex continue, India continues to remain a lesser favored destination for global investors, and does that have an impact on the growth story?
So think about it this way, Neeraj. AI spends on capex are to be able to create AI capabilities. Someone has to use the AI capabilities. We are using them. We are the users. We do not want to spend on data centers. Let someone else do that. We are not spending on energy infrastructure for AI. Let someone else do that. We are using AI to make a meaningful and real difference in everything we do.
You're talking about M&M or India at large?
M&M.
Okay, perfect.
Right? And hopefully India. Right? Because that's our strength. Our ability is to be able to invent, to take software and be able to do things with it. And M&M is going to be a leader in leveraging AI to become a tech leader in every industry that we play in. We haven't talked about it by consciously over the last 2 years because we wanted to show real outcomes. And as our teams have done that, we are now talking about what we're doing in AI. Still not at the level of detail that some would like, but that's something we will do in future. But we're seeing real applications of AI across a vast area, and it's not just about productivity or efficiency.
Sure.
There's so much focus on jobs with AI, but AI is helping us improve quality for our cars. It's helping us create better weld for our cars, better paint for our cars, helping us reduce service time for customers when they come in, helping us reduce the downtime in a plant and be able to increase capacity by doing that. So these are all the things from a quality standpoint. The customer experience is another vector. Being able to reach out to many more customers. With the XV7X, so due to AI and only run by AI, we had 17,000 more test drives because AI could handle all customer calls coming in, converse with them on WhatsApp, and be able to offer real information in a manner that customers wanted, and that's creating meaningful outcomes from our standpoint. And then, of course, efficiency and productivity as well. So AI is operating across a vast range of things. We're the users of AI. I spend an hour a day on AI now.
Yeah.
And that's something that all our leaders are starting to spend more time because it's about the processes. It's about what you do every day. If you read 5 newspapers in a day, in 5 minutes you can actually create an AI agent that will go and get all the news that you want and deliver it to you in whatever frequency you want. Now, that's a personal tool in terms of productivity, but there's a lot that can be done in every process, in every business. And that's what we're leveraging now.
30 seconds, give us a cool hack since you are using AI. A lot of people don't know how quite to do that. How is Dr. Anisha using AI?
At this point, I'd just say learning. Just put in. The hack here is that whatever you think you don't know, ask AI saying, you can tell AI, help me code something. Try this out. Tell AI, help me code a game. Pick whatever game you want. And my sense is in about 10 minutes, you'll have a game that's ready, that's coded, that you coded, but AI has taught you how to code it.
How cool. That is really good to know. Well, I'm sure it's not as simple, but in the 30 seconds we could, you just told us something that people can maybe try and do as well. This is coming from Dr. Anish Shah, a true business leader in his own right. But Dr. Shah, thank you so much for joining in today and giving us thoughts. Really appreciate your time.
Glad to be here. Always a pleasure.
Thank you so much.
Okay, superb conversation there with M&M, the stock at its day's high, and that AI hack was truly a cool one. Rudramurthy BV, founder director of Vachana Investments, with us on the show this afternoon. Rudra, I'm going to start with an M&M call since that was the interview we just played out.
Definitely, yes. The best stock if you want to pick from the auto sector, and one should definitely have in portfolio. For me, yes, this stock has now also made a clear breakout, and definitely it is headed towards 3,500. So with a stop loss of around 3,150, I will be long looking at targets of 3,500. Looks very, very bullish on chart.
With M&M, Rudra, good afternoon. This is Hiral on this side. How are you looking at a Hero Moto ahead of numbers? The company expected to report numbers post-market as?
Yeah, Hiral, if I have to look at the charts of Hero Motor, it is in a clear downtrend. But then we don't know how the results will pan out, keeping in mind the estimates as well as the actual numbers, whatever gets delivered. But stock on chart is clearly on a downtrend. Strong support for this stock, Hiral, comes at around 4,600 zones. So from current market price of around 5,100, I will wait out for results to come out. I don't want to preempt anything and take any position. But if you see the chart patterns are definitely coming down from levels closer to that 6,300. Stock has seen a good downfall and it is now taking support at around 4,900 to 5,000 zone. So it is in a clear downtrend. So I will avoid, wait out for results to come and then take a fresh call based on the results.
Just a good time, Rudra, to get your BTST ideas. Do you think that there's enough calls out there for a positive move tomorrow? Or any shorting calls?
No, for me, if you see the overall market texture today from lower levels, yes, it has held support at around 23,800, 900 zones on Nifty spot. And we have seen a good bounce from those lower levels. Yes, you have a lot of negative cues in terms of rupee dollar, or even if you see the Brent crude prices moving up, again FII is selling, all these things are definitely not looking great, but still markets have shown a lot of resilience and it is holding that support at around 23,800 on Nifty spot. So if I have to take a call, I will still look at a BTST call, no shorting right now, and I'll be a buyer in Federal Bank. Yes, number one, results have been very good from Federal Bank. And if you see mid-sized private banks, they are really doing good. Whether you see RBL Bank, Bandhan Bank, Indus India Bank. So these are all some of the stocks from mid-sized private banks which have done very well. So at current market price, the risk reward is very favorable. So I will be a buyer in Federal Bank at current market price. One can keep a target of around 300 to 305 for a BTST kind of a trade. And if you slightly have a longer time horizon, this stock can even go towards 325, 330, a good risk reward to buy at current market price. Keep a stop loss of around 290 for this long call.
Okay, stay on with us. Deepan Mehta joining us this afternoon. Deepan, great to have you on and hope you're doing well. What have you made of the results season so far? More winners than losers? Or the data doesn't really matter because the whole West Asia crisis happened after?
Yeah, Tamanna, good afternoon and thank you for having me on your show. So I think this is early time for the season, earnings season, and therefore all the good results have come so far. But nonetheless, I think except for software services, we are seeing across the board very good, I would say momentum behind the earnings. But this was supposed to be a good quarter. We were supposed to see a revival in the earnings. But the bigger problem will start from the June and September quarter, where we have seen massive disruption because of the Iran war and also the way oil prices have gone up and the way the interest rates also have gone up. So I think the bigger problem will come now. And if the war gets extended, then the problems fundamental problems which we face will even further deepen. So right now it seems to be okay. But as I said, I think we need to have a very, very close eye on the oil prices. These levels of oil prices are just not sustainable and will require a lot of reset at our end.
Okay. Deepan, looking at the problems that you're going to see in the next few months because of the West Asia crisis, what are the safe bets you're taking? Just wondering what your thought process is right now. Are you sitting on more cash than usual or are you well invested and where?
I think that we are generally well invested. Maybe 5-10% cash would be there in the portfolio, nothing major from that point of view. But always on the lookout for good opportunity. And I think that this war, one of the good investment themes which is coming out of this war is this energy security. I think not just in India, but across the world, I think energy security as an investment theme is going to become very important, more important than perhaps defense or railways, what we had in the last 5-10 years or so. And energy security is something which, we are trying to figure out which are the winners going to be over here. Right now, that is not very apparent. But I think there'll be increased focus on oil and gas exploration. There could be more focus on the electrification of the transportation sector. And even more incentives can be given for alternative energy like solar, wind, and maybe even to an extent, if some companies which can assist in creating alternative sources of imports as well. So from that point of view, I think that's something which I think the government certainly will look at now that the elections are over and done with. More attention will be given to this entire energy security investment theme. And many companies can come into focus over there. For example, India needs more oil and gas. So why not give a lot of incentive or encouragement to ONGC and Oil India for exploration, not only within India, but overseas as well. Similarly, I think we need to work with new technologies like coal gasification. So that would benefit companies like BHEL, Coal India, which are engaged in coal gasification. Then there is green hydrogen also. And so Reliance Industries is working on green hydrogen as to take it onto a commercial level. So these are the kind of emerging investment themes which we see after this disruption. And we haven't seen such a disruption in the oil market ever before. So these are the kind of investment themes and stock ideas that we are searching for at this point of time.
One, interesting sectors that you're talking about right now. Good afternoon, Hiral here. How are you looking at the entire capital goods and infra theme as well? Because one, you do have a L&T that will be reporting numbers today. But from here on, do you think along with power, infrastructure becomes another sector to look at?
Absolutely. I think globally infrastructure and power are going to be one of the highest growth areas because of the data center madness which is taking place. And more data centers means more construction activity, more power plants, more distribution lines. So from that point of view, a very positive on the entire power equipment segment. And right from renewable power to even gas, coal-based power plants, transmission equipment, transformers, transmission lines, the actual conductors also. Across the board, I think these companies are going to have a great time. We've already seen the numbers which have come through last 2-3 quarters have been exceptionally good for these companies. And I think that this sort of momentum is expected to continue in the near future. So we would definitely like to be overweight capital goods, especially capital goods which have got linkages to the energy and the energy industry.
Okay, let's go across to Varsha very quickly. Lot of stocks buzzing today. We'll get a quick look before we close off. Varsha.
Well, let me start with the gainers first. You have Quest Corp, wherein buzzing on the back of strong Q4 numbers. Professional staffing was the standout. 13 new client logos added in Q4. General staffing resilient despite regulatory headwinds. Talking about Wockhardt, again a strong quarter. Reported profit in FY26, marking its first profitable year since 2022. Saw growth in biotech and emerging markets. Insulin-based biotech products perform well. Other income aided profit. Titagarh, well, buzzing on the back of West Bengal election. Bengal-based wagon maker, robust order book stand at around 27,755 crores. Sees passenger business to be the dominating part. Then you have Tata Tech, again strong numbers. Q3 momentum carried out in Q4. Double-digit top-line growth and margins expanded over 120 basis points. Beat the guidance. Double-digit organic growth guided for FY27 with margin expansion. Talking about the losers, you have Voltamp, Transformers. Weak set of numbers. Growth impacted due to weak execution. Lower realization led to the drop in profits. Ongoing Middle East conflict, increased input costs of transformer oil. Lastly, Aarti Industries, again, a weak set of numbers, I would say. Sequential revenue decline and weak pricing momentum. Export market remains under pressure for the company. Agrochemical, margins continue under pressure. Demand softness across international markets. So these are all the stocks which are gaining and losing as of today.
Hey, thank you for that. That's quite a list there. Rudra, any highlights over there from that list that Varsha put out for us all together? And any opportunities there? Would you look at Voltamp for a recovery trade?
Yes, definitely. If you see the chart pattern of Voltamp, the stock has given that clear base formation and it is just moving up. But if you see the overall pattern from levels closer to that 9,000 zone, the stock has given this kind of a correction after that up move. So might be, yes, if you see this stock coming down further to levels closer to that 9,200, 9,300, that is where one can look at accumulating this stock, or else I will definitely avoid at current market price because it has seen a huge move already and today you are seeing correction in this stock. So might be if you want to buy this stock, wait out for levels closer to that 9,100 where you might see some consolidation. Let us not catch the falling knife right now. But one more stock if someone wants to buy for short term. So for me, yes, NBFC and even gold finance companies are looking very good. So look at AB Capital for that matter, Chola Finance. These are all stocks which are looking very good to me on chart. So if you want to pick two two top stocks from NBFC, it will be AB Capital for me, as well as Chola Finance, and even Gold Finance Company looks good for me, and especially Manappuram. So Manappuram at current market price is a buy for me. If someone has a 1 year kind of a time horizon, I won't be surprised to see this stock going even up to 400 rupees. So Manappuram is a good buy both for short term as well as medium to longer time frame. Look at targets of 400 to come on Manappuram for a 1 year time frame, and for very short term, yes, this stock can move towards 325, 330 zone. Available in futures, one can definitely go long in future. Keep a stop loss of around 300 and look at initial targets of 330, and eventually, yes, for an investor, this stock can give 400 rupee target in next 1 year.
Manappuram is a big call. Deepan, quick view on BHEL. Because BHEL, after the results, also did well. They've got some new order books also coming in. Is that space something that you like?
Tamanna, first disclosure, we are invested in BHEL.
Okay.
And amongst all the engineering companies, it has got the best order book position. Like almost 7-8 years earning visibility is there. And I think next 3-4 years, you will see fantastic growth coming through to BHEL. They have an established track record, excellent engineering skills. They are doing certain projects which are very high value. So I expect that the margins also will improve because of that. And I think they are in a position in a very, very sweet spot just now where there is adequate buildup of renewable energy. And that needs to be matched by conventional energy sources as well, which may act as a backup. It's also looking at overseas order books as well. So very, very positive on BHEL. Don't go by what its present price earning multiple is. I think next 4-5 years, you will see the company go to a different level as well. But as I said, we have investment in BHEL, so our views could be a bit biased. So, but nonetheless, I think it's a great story to look at more closely.
Fair disclosure there, Deepan, and I'm glad we got your view on it as well. So Deepan Mehta, Rudra, thank you so much for speaking with us this afternoon. As we close off this Tuesday afternoon, I would say at least you're better than where you started. The advanced decline ratio is 50-50. I mean, it's skewed towards the declines, but again, better off where we started. We should pull up the intraday of the Nifty, and that will give you an idea of the kind of recovery that we've seen today. And your recovery from the middle of the day has actually been quite heartening. You're closing at least here above the 24,000 mark convincingly.
Convincingly about 24,000. What's interesting is that support levels are not being broken right now, and that's the positive that you have to pull out in terms of markets. But the other bit is the resilience that you're seeing in a couple of sectors. If you see the heat map in terms of sectors, that pressure has continued to build in terms of financials, but good amount of resilience when you talk about defense, even to that matter, IT to some extent, in spite of that little bit of pressure, there is some resilience there, and the telecom space. But real estate, absolutely battered today, 1.5%.
It just goes through this seesaw, frankly. Some days are very good and some days are very bad, and some profit booking comes in as well. I just want to quickly pull up the heat map as we go into the closing. 8 seconds to go, and this is how we're closing this afternoon. M&M, top of the charts, good numbers. You heard from the management on NDTV Profit. We'll have that con call in a bit. Ultratech doing well, Hindalco doing well today as HDFC Life and Nestle also bouncing back. So the big boys are there in place. ICICI Bank taking a bit of a knock. So is Jio Financial. That's why you have the whole financials index a little muted. Tech M not that great. Axis Bank also seeing some pain. The top gainers and losers should give you the specific stories of the day, because it's quite stock specific when it comes to results. And you're seeing that flowing through. RT Industries, for example, not a set of numbers that was enthusiastic. Godrej Properties did very well and then cooled off. Raymond also after its results.
Likewise here, if you talk about CAMS, Tamanna results, Quest Corp again on the back of results. You have Aavas Financial also that will be reporting. It's interesting to see a credit access growing. Volumes very strong, 12% surge. In fact, it's cooled off slightly, but strong moves coming in there as well. So I think it's been a day for the small and the mid-cap space, where a lot of buying has emerged at lower levels. Exactly. And the benchmarks have remained in a range for the last 7 sessions.
Yeah, it's going to continue to do so while oil is elevated and Brent prices are elevated. But that's all the time we have from Hiral, me and the team that put the show together. Stay tuned. Market Express up next.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Good evening, you're watching Market Express with me, Shreyanti Singh, and this is a show that gets you a roundup of everything that has happened in today's trading session as well as the market action, and let's talk about just that. It was a largely weak day of trade that you were looking at on the Lal Street. Now, when you talk about Nifty, that managed to close slightly above 24,000 mark, whereas Sensex slumped more than 180 points. Broader markets outperformed benchmarks and ended the day in green. Moving on, then let's talk about sectoral action that remains mixed. Nifty, Realty and Bank end as top sectoral losers. Defense and FMCG on the flip side lend a little bit of support. So that's the entire sectoral action that you were looking at as well. Let's also talk about oil prices. Now, that was a key talking point in today's trading session after Monday's sharp rally, because you do have oil prices that edged a little bit lower. And this is as traders really weighed some of those fragile ceasefire signals in the Middle East against continuing disruptions in the Strait of Hormuz. Now, when you talk about Brent, it slipped below the $113 a barrel mark, even as the waterway remains largely empty, with hundreds of vessels clustering near Dubai to avoid fresh risk at this point in time. And you do have clashes between the US and Iran, damage to an oil terminal in Fujairah as well, and US movements into the Persian Gulf that are keeping supply risks very much alive, while concerns of demand destruction begin to surface. Let's also move on and talk about gold prices that edged higher, recouping part of yesterday's losses as relative calm returned to the Persian Gulf after a brief flare-up in hostilities. So that's the entire signal that you did have gold prices really looking at. Bullion climbed back above the 45.50 level as the fragile US-Iran ceasefire held, at least for now, easing immediate safe haven volatility. However, you do have soaring energy prices. That's something that gold prices are looking at. And other than that, there's of course the outlook for interest rate cuts. And that's also going to be key to watch. Will keep a pressure and a lid really on non-yielding gold, which remains sharply lower since the beginning of war in late February. Now let's also move on and get a little stock specific as well. So Marico is the one to look at that delivered a steady set of numbers in the fourth quarter, about a 3.5% uptick coming in on this particular counter, and profit and revenue largely in line with street expectations. Top line growth really remained strong, driven by healthy volumes, but operating margins came in lower than estimates. And this is largely due to cost pressures. Now, you do have earnings that do about double digits on a year-on-year basis. And the miss on margins, let's talk about that as well, because that in fact kept the street focused on commodity trends as well as pricing power going forward. Let's move on and talk about M&M that delivered a strong set of numbers in the March quarter as well. And you're looking at broad-based growth really across its key businesses. The stock, of course, was buzzing away in trade with that 3.7% uptick also coming in. Auto and farm segments, they posted healthy volume-led growth, while profits rise sharply despite some margin pressure. Now the company also gains market share, and this is in some of their key vehicle categories. You're looking at return ratios that touch their highest level under the current management, and that's also something that was really cheering the stock. Let's also talk about Tata Chemicals on the flip side, that posted a weak set of numbers. Now that was dragging on the stock just a tad bit, and it was the quarter when you talk about it, it was weighed down by sharply lower soda ash realizations and a sizable one-time impairment charge in its US business as well. Now, when you talk about revenue and operating profit, they declined as global pricing pressures and higher fixed costs really hurt margins, even though stronger volumes in India and Kenya offered a little bit of support. Now, the quarter ended with a deep net loss and higher debt levels, keeping the street really focused on soda ash pricing going forward as well, and the growing role of non-soda ash businesses going forward. So any sort of commentary coming in on that later on is going to be key to watch here. Let's also move on and talk about brokerage views when it comes to something like a Godrej Properties that remain largely constructive. Of course, the stock was down about 4.5% thereabout, though not without divergence, because you do have Jefferies and BofA that both retain a buy, citing strong cash flow visibility and robust pre-sales quality and a clear path to 20% ROE by FY28, aided by improving construction spends as well as balance sheet discipline. You do have Investec that, turned cautious a little bit, downgraded the counter to hold on valuation even as it acknowledges execution strength as well as improving collections. And the stock is sitting at the crossroads of execution confidence and valuation comfort going forward. So those are the two triggers to really watch out for. Let's also move on and talk about Wockhardt that reported a return to full-year profitability in FY26. You're looking at a turnaround quarter, its first return to profitability coming in since FY22, driven by strong growth in biotech and some of the emerging markets. Now, insulin-based biotech products perform particularly well, while when you talk about the India and the UK businesses, you're looking at healthy revenue growth there as well. Now, you do have some one-off costs that weigh on the quarter, but settlements and other income really support the bottom line. And the stock, of course, was cheering it with that 7.5%, almost 7.9% uptick also coming in. Let's also move on and talk about Petronet LNG that delivered a strong March quarter performance with profits rising sharply even as revenue moderates. Now, the outperformance was really driven by better than expected volumes and a sharp improvement when it comes to margins, aided by inventory and trading gains. Exceptional income linked to the reversal of user pay charges also really lifted their reported profit, though the underlying sort of earnings trend really remained a little bit steady. Moving on, then let's also talk about CAMS that delivered a steady set of numbers in the March quarter. Now, you're looking at revenue and profits largely seeming stable, at least on a sequential basis. Now, the company posted its highest ever quarterly revenue, mind you, led by strong growth in its non-mutual fund businesses. While margins remain healthy, you do have profitability that stayed flat even as EBITDA touched a record high, and the stock, of course, was buzzing away in trade with that 9.1% uptick, as you can see at close. Let's also move on and talk about RT Industries that delivered a strong set of numbers in the March quarter. Of course, that failed to really lift up sentiment on the street, but it was, when you talk about the earnings fine print, the quarter was supported by higher volumes and improving margins. Revenue growth is broad-based that you're looking at, while a recovery in margins is also aided. And this is by favorable developments in China, even as agrochem margins remain a little bit under pressure. Now, when you talk about the profit growth, that really stood out this quarter, reflecting better operating leverage and stronger execution. Let's also talk about Jindal Stainless that delivered a steady fourth quarter as well, supported by strong domestic demand across key sectors. The stock, of course, wasn't doing all that much, but you do have global headwinds that persisted. Revenue and profits edged higher sequentially, though margins softened slightly due to import pressure, as well as rising energy risks linked to Middle East tensions. While cheap imports and geopolitical uncertainty continue to cloud exports, you do have sustained domestic usage, as well as higher adoption trends that remain key offsets. Moving on, then let's talk about something like a Quest Corp that delivered a strong sort of set of numbers in the March quarter performance as well. So you're looking at strong momentum when it comes to professional staffing. The segment sees healthy client additions supported by increased hiring from global capability centers, while general staffing also remains resilient despite regulatory challenges. Now, when you talk about this particular counter, it was buzzing away in trade with that 5.6% uptick also coming in. You're looking at better operating leverage that lifts margin and profitability, keeping the overall growth outlook as well steady going forward for the business. Moving on, then let's talk about delivery that faced fresh competitive pressure and look at that 1.7% thereabout knock also coming in on this particular counter at close as Amazon rolls out its own delivery services, stepping up the fight in the logistics space, with large e-commerce players contributing a significant share of deliveries business. You do have Amazon's move that raises concerns around client concentration and pricing power. Now, Amazon, in fact, is building an in-house delivery network. Competitive intensity for logistics players is clearly set to rise. Moving on, then let's talk about Tata Tech that delivered a strong set of numbers in the fourth quarter. Now, you're looking at about a 5.5% uptick coming in for this particular counter. And you do have, in terms of the result as well, this particular counter also extending the momentum seen in the previous quarter. So the company posted double-digit growth, largely supported by improving margins and a pickup when it comes to the full vehicle program wins. Order book visibility also strengthened. The management guides for healthy organic growth next year, along with further margin expansion. Moving on, then let's talk about Voltam Transformers that reported a weak set of numbers in the fourth quarter with revenues and profits declining on a year-on-year basis. Margins come under sharp pressure as operating leverage weakens, even though the company announces a healthy dividend payout as well. And you do have lower profitability as well as higher costs that weighed on earnings, largely making this a soft quarter from an operating standpoint. Moving on, then let's talk about Afcons Infra that is in focus after securing a new EPC order worth about 373 crore rupees in April. Now, the order comes from its urban infrastructure and metro segment, adding visibility to its execution pipeline. When you talk about the latest win, it underlines steady order momentum for Afcons, even as infra activity really remains firm across key cities. Moving on, then let's talk about Gopal Snacks that is in focus after its stock really rose for the third straight session, and with that 5.2% gain also coming in on the back of sharply higher volumes. And the company, just for a little bit of background here, has a strong presence in its core markets and continues to expand across newer regions, even as recent financial performance remains a little bit under pressure. You do have profitability, in fact, that has taken a hit due to softer margins, but the market appears to be betting on the growth, visibility and expansion beyond its home base. Moving on, then let's also move on and talk about China's EV giant BYD that is facing a clear split between home and overseas markets. Passenger vehicle sales at home fell for an 8th straight month in April as competition intensified from domestic rivals like Leap Motor and Zeekr, both of which reported record monthly deliveries, while domestic volumes declined. On a year-on-year basis, you do have BYD's exports that really surged to an all-time high, jumping more than 70%, highlighting its growing reliance when it comes to overseas markets to offset mounting pressure in an increasingly crowded Chinese EV space. Moving on then, let's talk about Palantir that has delivered a blockbuster first quarter, beating street expectations across the board and raising its outlook as well. Now, when you're talking about revenue that surged at its fastest pace since listing, while profits nearly quadrupled as well, and underscoring how AI really, the demand in fact is translating into real earnings. The company also sharply lifted its full-year free cash flow guidance well ahead of estimates, reinforcing investor confidence in the company's ability in fact to convert growth into cash as its market value continues to soar. Moving on then, let's talk about Pinterest that reported a strong set of numbers in the first quarter as well, beating expectations on both earnings and revenue while delivering double-digit sales growth as well. The company also raised its second quarter outlook, signaling that confidence really in advertising demand and user engagement trends. While the quarter slipped into a net loss compared with last year's profit, operating performance improved meaningfully, with EBITDA well ahead of estimates and monthly active users continuing to grow steadily across markets. Moving on then, let's talk about JLR India that cuts prices on select imported Range Rover models, anticipating benefits from the India-UK Free Trade Agreement. The price reduction applies to high-end models brought in from Britain, aimed at improving affordability and strengthening market positioning. Locally manufactured models remain unaffected, while the move also signals how global automakers are preparing for duty changes under the proposed trade deal. Moving on then, let's talk about Australia's central bank that has raised interest rates to 4.35%, matching the peak reached late last year as well as inflation pressures refused to ease. The Reserve Bank of Australia cited rising fuel and commodity prices linked to the Middle East tensions, warning of possible second-round effects across the economy, and the board also signaled rates that could stay higher for longer, with its also some of the latest projections also pointing to further tightening into 2026. Moving on then, let's talk to you about some national news then on the election front. Let's get you the latest on one of the most defining political moments in recent Indian electoral history. Now, the BJP has announced that its oath-taking ceremony will happen on May 9th, and this is after a landmark lotus bloom in the state, and that's West Bengal that I'm talking about, as Mamata Banerjee lost a state that she ruled for 15 years in a bastion in a high-stakes battle. Suvendu defeated Mamata in the key election battleground of Bhabanipur, in a state where the BJP had almost no foothold a decade ago. The BJP, in fact, has won 206 seats to secure more than two-thirds majority in the assembly. Let's keep it going with the election action as well. Tamil Nadu, the citadel of Dravidian politics for over 50 years, with the binary politics dominated by the DMK or the AIADMK, is set for change right now. Actor politician Vijay's TVK has won 108 seats and is expected to look for post-poll allies. The result, of course, has triggered negotiations with Congress, PMK and other parties over support for a TVK-led government. And Vijay's scripted history in this particular electoral debut and post-poll allies are going to be helping the TVK-led government really come to power. Moving on then, let's talk about Assam that has delivered a decisive verdict as well, handing the BJP-led NDA a resounding third straight term in power. The alliance has crossed the majority mark, comfortably winning 101 of the 126 seats in the state, with the BJP alone clinching 82. While the mandate reinforces the ruling coalition's dominance in the state, the results also signal a political shift, which is very clear here, marked by the defeat of the sons of the three former chief ministers. For the Congress, with 19 seats, the outcome underlines the scale of the challenge ahead in a rapidly changing state. Let's also move on and meanwhile also talk about the biggest ideological defeat perhaps that may be seen in Kerala, where the left lost their last bastion in the country. And Congress, in fact, supported UDF alliance has swept 102 of the 140 assembly seats, handing a stinging defeat to the LDF. Now, the rout is widely seen as voter pushback against what critics called an increasingly authoritarian governing style after the LDF's unprecedented re-election back in 2021. Now, the BJP, meanwhile, made a modest but notable breakthrough, opening its account with 3 seats. Let's also move on and away from the world of elections then. Mumbai police have formed a special investigation team to probe a large-scale fake birth certificate racket uncovered by a civic body probe. Investigators, in fact, estimate that more than 87,000 forged or manipulated birth certificates may have been issued between 2024 to 2026 by tampering with official records. And this particular committee is going to be examining the role of civic officials, middlemen, or others involved to really, look at some of these allegations that some documents were used to provide identity proof to illegal foreign nationals. Moving on, then, let's get you some international news. Tensions in the Middle East have flared sharply after Iran launched fresh missile and drone attacks on the UAE, injuring 3 Indian nationals in Fujairah and pushing a fragile ceasefire to the brink. Now, you do have PM Modi, who's also talked about this as well, but the strikes come amid escalating pressure around the Strait of Hormuz, a critical global oil artery. And US President Trump has issued a strong warning to Tehran as well, raising fears of further confrontation. Moving on, then, let's talk about Iraq, that has rolled out unusually steep discounts on its Basra crude for May loadings in a bid to keep oil flowing. And this is despite disruptions in the Strait of Hormuz. The OPEC producer is offering price cuts of up to $33 a barrel, but only for buyers willing to load inside the strait at a time of heightened regional tensions. The move highlights the growing strain on Gulf oil exports as the Iran conflict really continues to choke key shipping routes. Moving on, then, let's talk about a powerful explosion at a fireworks factory in China's Hunan province that has killed 26 people and injured 61 others. Now, when you talk about this particular blast, it happened at a fireworks plant that triggered a massive rescue operation, forcing authorities to evacuate residents within a 3-kilometer radius as well. More than 1,500 responders, aided by drones, dogs, and robots, searched the debris as well, and police are investigating the cause and have taken control measures against those responsible for running this particular facility. Moving on, then, millions of football fans in India and China could miss out on the upcoming FIFA World Cup as broadcast rights remain unresolved. In India, talks have hit a deadlock after FIFA rejected a $20 million bid from the Reliance Disney joint venture. Meanwhile, no official broadcaster has been finalized in China either, and the uncertainty really raises concerns over access in 2 of the world's biggest viewing markets. And with that, we're out of time on this edition of Market Express. Thank you so much for tuning in.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Markets end lower amid F&O expiry volatility today. Nifty slips below 24,100 levels, while Sensex also closes in the red. Though the broader markets outperformed today, ICICI Bank and Coal India amongst the top Nifty losers. Rupee ends at record closing low of 95 rupees 29 paise against the dollar. A strong dollar and elevated oil prices continue to keep the currency on the defensive. Oil prices remain volatile as new attacks in Strait of Hormuz threaten fragile US-Iran ceasefire. Brent hovers over $112 a barrel as Middle East tensions rage on. Meanwhile, US Gulf Arab nations draft new UN resolution on Strait of Hormuz. Mahindra & Mahindra's Q4 results beat the street estimates with profit rising a solid 53.5%. Group CEO Anisha Shah tells NDTV Profit that it's on track to meet the key FY27 targets and expresses confidence in keeping the bar high. HDFC Bank prepares for big leadership transition with Keki Mistri's term ending. Sources tell NDTV Profit that HDFC Bank may appoint a new chairman in June. RBI officials have been meeting board members on governance and succession since Atanu Chakrabarti's exit. Biocon charts leadership transition. Sources tell NDTV Profit that Biocon's long-term succession plan takes shape with Claire Majumdar to be the potential successor to founder Kiran Mazumdar-Shaw. Delivery is under pressure after Amazon unveiled its own delivery services, with Amazon and other e-commerce players accounting for nearly 60% of deliveries revenues, and the move raises competitive intensity and margin risks. Cabinet to chair key meet today at 5 p.m. Big boost likely for MSME aviation sectors. Sources say that approval expected for 2.5 lakh crore rupees credit guarantee scheme by the cabinet. After the BJP's stunning win in the state of West Bengal, the new chief minister will be sworn in on the 9th of May, Rabindranath Tagore's birthday. Sources tell NDTV that Shuvendu Adhikari is the main contender for the top post as the chief minister. All leaders heading to New Delhi today. Vijay's TVK prepares to stake claim to form the government. He could be sworn in on the 7th of May as the party will seek 2 weeks' time to prove its majority in the state of Tamil Nadu. Hello and welcome. You've tuned into Profit 360. I'm Nisha Podar, and over the next half an hour, we'll tell you all that you need to know about the markets as well as the other news developments. First, starting with the markets, well, despite the recovering from the day's low point, the benchmarks really ended still in the red, while Nifty managed to hang above the 24,000 levels. Sensex wrapped trading session with over 200 points cut today. Now, the high voltage state election outcomes across the 5 states, also the weak global cues and the FNO expiry really kept the action today largely mixed for the markets. Now, the broader markets, they continued their outperformance but ended flat. Let me take it straight across to my colleague Jasmeet with all the action from the markets today. Jasmeet, tell us.
Well, a weak day for markets today. Nifty 50 ends in red, down about 0.3% and manages to close above the 24,000 mark. If we look at the top losing Nifty 50, we have stocks like ICICI Bank and Coal India, both losing over 1.5%. If you look at the broader market, it has outperformed the benchmark, where Nifty Small Cap 250 and Mid Cap 150 manages to close in green in today's trade. If we look at the top gainers in Mid Cap 150, we have stocks like Aurobindo Pharma and Aditya Birla Cap, both gaining over 3.9%. In terms of Small Cap 250, we have stocks like CAMS and Credit Access, which has gained almost over 11 and 9% in today's trade. If you look at the broader market and key sectors, the sectors end on a mixed note in today's trade. If you look at the top gaining sector, we have stocks like Nifty FMCG, Nifty Auto gaining the most in today's trade, up about 0.6%. In terms of top gainers in Nifty FMCG, we have stocks like Dabur India and Marico gaining over 3%. While in terms of Nifty Auto, the top gainers are something like M&M and Hero Moto, both gaining about 3.5%, and Hero Moto gaining about 1% in today's trade. Now, if you look at the top losing sector, we have Nifty Realty, which is worst performing sector, down about 1%. If we look at the top losers, we have Oberoi Realty and Godrej Property, both losing over 1% in today's trade. If we look at the key trends, well, Nifty Pharma ends in green for the 3rd consecutive session in a row, while the Nifty PSU Bank falls for the 5th consecutive day. Well, lastly, if you look at the aspect in terms of Nifty Media, it snaps its 4-day of losing streak and ends in green in today's trade.
All right, thanks so much, Jasmeet, for all the market action of the day. Let's take it straight to what's really impacting the Indian markets. It's also the crude oil prices, which slipped slightly after the US President Donald Trump really signaled efforts to support ships stuck in the Strait of Hormuz. But despite the dip, both Brent as well as WTI are still trading at higher levels. While Brent is hovering close to $113 per barrel, WTI crude has exceeded $104 mark. Now, this shows that until the tensions really ease in the Strait of Hormuz, oil prices are likely to stay volatile as well as elevated. This has also added pressure on the Indian currency. Remember, the rupee has yet again ended at a record closing low of 95 rupees 29 paise against the dollar, and also made its lifetime lows in the trading session, but did pick up to close at the lowest point as well. All right, let's take it straight across to what's really impacting from the global markets and the global developments, the Indian market and the rupee market. It's the war really that is really playing out, and tensions are escalating once again in the Middle East after reports of ships being attacked in the strategic Strait of Hormuz. Now, Iran's parliament speaker has warned the United States that they are just getting started, as Tehran insists it controls the vital water away. Now, Iran reportedly fired missiles and drones at military and commercial vessels, while the former US President, Donald Trump really had claimed US forces shot down 7 Iranian fast boats, a claim that's strongly really denied by Tehran. Now, meanwhile, remember, the US and Gulf Arab nations are drafting a new UN resolution on this particular crisis. But what is really happening inside Iran? Take a look at NDTV's Akil Jamil's ground report from the devastated Sharif University. Take a look.
The NDTV team has arrived at Sharif University campus. Behind me, you can see the visuals over here where the debris can be seen, and this is the frontal part of this building. And behind this very building, which was completely destroyed due to the aerial attack in a joint campaign by the US and Israeli forces, behind this there is another building which was destroyed. So this was the AI data center, and the impact of this attack was so intense, that the magnitude of this attack was so intense that nothing can be seen. Few things you can just recognize. There you can see the Iranian flags over there, which can be barely seen. Apart from that, few of the electronic items can also be seen, some water bottles. Apart from that, if you see, the other daily usage item was also present over here. I have been speaking to some of the individuals who were part of the university. They are saying that when that incident has taken place, no one was present at that moment because it was late at night at around 2 a.m. Here you can see this is one of the books which can be seen. This is just part of the debris over here. And apart from that, towards my left, if you see, this left portion of this entire building, the AI data center, has completely been demolished due to the impact of this entire aerial attack. And towards my right, just opposite to this AI center, is the mosque. So some portion of this mosque has also got impacted in this aerial attack.
All right, so that was the war update coming in from ground zero. Let's take it back home. And big earnings today. Mahindra & Mahindra has delivered a strong Q4 performance, beating the estimates across key matrices. Now, profit came in at 3,737 crore rupees. It rose by 53% on a year-on-year basis. Revenues also impressed, rising over 26%, again beating the expectations. Operationally, though, EBITDA also increased 19% annually, but the margins, however, came in at 14.1%, which is about 80 basis points lower than the same period last year of 14.9%. Probably the cost pressure is what is impacting the margins here. In fact, my colleague Neeraj Shah interviewed Anish Shah, who's the Group Chief Executive Officer and Managing Director at Mahindra Group, and he spoke about setting a goal of 18% ROE and 15 to 20% EPS growth. In fact, their current ROE at 20% has been the highest under Anish Shah's leadership. Listen in to that part of the conversation.
So we have given a target of 18% ROE, and we had set 15 to 20% EPS growth. In the last 5 years, we've delivered 57% annualized EPS growth. And as I look forward, yes, we will continue to raise the bar. Our businesses are performing at a very high level right now. In terms of ROE, our investors would not want us to go more than 18% because we are putting capital back in for growth. And yes, we are at 20% right now, but I've always maintained we will be slightly higher or lower than 18% as we continue our growth journey. And that's the more important part. It's about each of our businesses becoming large businesses. And many are on a very strong path to do that. And that's what is a highlight of this year in particular, where many businesses have had a breakthrough year. And all our businesses have contributed to the growth for this year. So for me, it is about, as a leader, ensuring we have a higher threshold that we set every time. And the teams have responded very well to that.
Right, so that was the M&M result and the growth projection going forward. Another one from the banking space is Punjab National Bank, which has reported a steady set of numbers for the fourth quarter. In fact, The profit after tax really rises 14% YOY to 5,200 odd crore rupees, while operating profit also sees a healthy double-digit uptick. Asset quality continues to improve, with gross NPAs declining to 2.95% and net NPAs also easing further to 0.29%. However, the net interest income remained under pressure, slipping about 3.5% YOY, while the other income also declined. On the cost front, remember, operating expenses saw a sharp drop even as provisions increased on a yearly basis. Now, the bank, remember, has also announced a dividend of 3 rupees per share, rounding off a mixed but stable quarter, and that was from the earnings corner. Now, let's take it straight across to an exclusive here, and HDFC Bank is in focus as it prepares for a key leadership transition. Now, sources indicate that the country's largest private sector lender could see a new chairman appointed as early as June, and this comes as KK Mistri's interim term is set to end, and his reappointment now looks unlikely. In fact, my colleague Shrimi Chaudhary joins in with all the information. Tell us, Shrimi.
What we gathered so far is that, of course, the bank is going to see the new chairman mostly by mid of June or by end of June is what indication we are getting. And this is coming clearly at the time when KK Mistry tenure as an interim chairman is ending next month, to be precise, on June 18th or 19th. And his reappointment is unlikely. The exact reason, however, is not known. But what indication we are getting at this point, that since he's been associated with bank for a very long time, and this could possibly lead to the conflict of interest, and that is why he could not get the full term as chairman. And in fact, the lender is in touch with RBI on the board restructuring, and what we've been given to understand that in fact some of the option is being explored at the lenders level, whether to kind of elevate one of the existing board member as chairman, or to get some external candidate on board as for this role. So clearly it's important, because what we also gathering at this point that in fact the senior RBI official is visiting senior board members every 2 to 3 weeks since the Atanu Chakrabarti abrupt resignation, to take a stock on the succession planning, to entire board restructuring and the governance as well. The another key important information we gathered at this point that the two external law firm is expected to submit its report in next 2 weeks, and that is going to shape the lender's next move. And we reached out to HDFC Bank for their comment, but we still awaiting reply.
Right, thanks Shrimi for that. Now talking about HDFC Bank, well, HDFC Bank is strong and well capitalized. That's the word really coming in from the former HDFC chairman Deepak Parekh. Listen in to what he had to say.
Are you talking of HDFC Bank? Yes, I have nothing to do with HDFC Bank. I've retired. I'm not on the board. So I can't say anything about it. Except that you must read the Reserve Bank of India statement that the bank is strong, well capitalized, and there are no ethical issues.
All right. Also, on another big corporate development that is really taking place, sources tell NDTV Profit that Biocon is putting a long-term succession plan in place, with Claire Mazumdar seen as a potential future successor to founder Kiran Mazumdar-Shaw. Nimit, our colleague, gets us all the details. Nimit, tell us.
As we had reported earlier today, that Claire Mazumdar has been looked at as a long-term ownership succession plan for Biocon, and Kiran Mazumdar-Shaw has confirmed that on social media, that she's not looking to hang up her boots just yet, but this is a part of that long-term thinking, as we had reported earlier today. Now, the important question is, who is Claire Mazumdar? Now, 37-year-old Claire Mazumdar is the niece of Kiran Mazumdar-Shaw. She is the daughter of her brother, Ravi Mazumdar. Now she's the founder and CEO of Bicara Therapeutics, which is listed on NASDAQ since 2024. Her academic qualification is also quite great. She holds a biological engineering degree from MIT, an MBA from Stanford Graduate School of Business, and a PhD from cancer biology from Stanford School. Now, what is important is sources tell us that this is not a short-term plan. It's not going to affect the management or day-to-day operations of the company. This is simply part of the company's and Kiran Mazumdar-Shah's long-term thinking for a replacement. And as every company does, they are planning for the long term, but she is being looked at primarily as the long-term ownership head for Biocon in the future.
All right, Nimit, thanks so much for all those details. Of course, succession planning in advance always augurs well for clarity in the direction of a company. Now, in a historic mandate for the BJP in West Bengal, well, the party has really swept the assembly elections with a commanding majority, marking a decisive shift in the state's politics. Now, the new chief minister is set to be sworn in on 9th of May, and this is also a significant date of Rabindranath Tagore's birth anniversary. But the big question really remains, who will take the top post there as the chief minister of West Bengal after Mamata Banerjee steps down. Sources tell NDTV that Shubhendu Adhikari has emerged as the leading contender for the chief minister's chair, having defeated Mamata Banerjee twice so far. Meanwhile, senior BJP leaders are heading to New Delhi today. So lots happening in the world of politics as well. And also remember, post the election verdict in West Bengal, industry sentiment is really clearly turning optimistic. NDTV Profit Sharad Dubey caught up with the top business leaders to gauge what the mandate could really mean for Bengal's economic growth trajectory. Listen in to what people had to say.
There's a relief that the election is over and the fact that there has been a decisive mandate. So clearly the government has leeway to do development in a focused manner. The other, of course, is that this is after possibly 50 years that we will have a government in the state which is also of the same political dispensation as in the center. So that should give a greater alignment to priorities, to development. And this will be a new thing as far as Calcutta is concerned, now Bengal is concerned. So we are looking forward to that new alignment.
Calcutta and Bengal has been one of the pillars in the jewelry industry because the skilled craftsmen, the karigars, they come from the districts of Hooghly, Howrah, Mednipur. Whichever part of the country you go in, whether be it in diamond jewelry or gold jewelry, it is the Bengali karigars that have always been the behind the scenes people. They are the Vishwakarmas. And, they have always been, looking for jobs. Bengal is providing jobs, but then they have to go to the other states, other cities to look for those opportunities. But now I think that with the focus coming back to Bengal, they would be in a challenging situation for the people outside that, yes, the people would want to come back home.
We have around 30% branches in the eastern part of the country and 6% branches are approximately in that northeast part only. So when we talk eastern India, so we have around 30 plus 6, 36%. And these branches are contributing good business to the entire book of the bank. As far as sentiment is concerned, there's a good sentiment. If I have to look back my previous year performance in eastern part of the country. So my MSME book growth on an average was 20% as a whole on a country as a whole. But each eastern part of the country, the MSME book growth was more than the national average. So that is one point. Second, similarly in retail also. And the contribution from the eastern part has been significant. Given a situation currently the environment is, I believe that our bank is going to be benefited with the new environment coming, new government coming, and the policy changes are likely to be coming, and the government initiatives, central government has been giving a lot of initiatives, lot of support to the business. So I expect that eastern part of the country to help the bank in growing business book in the coming years.
All right, so that's the business community in the state of West Bengal really talking about this big shift in the political arena and how it's going to impact the economic scene in the state. Let's get chatting more on that. Jayanta Roy, who's the managing director of the Peerless General Finance and Investment Company, joins in. Jayanta Roy, welcome to NDTV Profit. And should I congratulate you for this big political shift that has really taken place? What is the sentiment and the mood like in the business community?
I think thank you, Nisha, for giving Peerless this opportunity to share our reflections. With the promise of a genuine double-engine sarkar, because now it's a reality that there will be a warm relation between the center and the state. Bengal's Obhuday, meaning economic transformation and the prosperity, we can now aspire by 2047, by the time India celebrates their 100 years of independence, the advantage now for Bengal would be the governance will be now synergized across like-minded states of Orissa, Bihar. So the vision and the policy of Sabka Saath, Sabka Vikas will also add. So these are the hopes of economic empowerment and economic prosperity which we aspire in the next coming days.
Jayanta, you have so creatively put this out, and of course we're aligning with the 100 years of our independence and how the economic growth is going to come in the state of West Bengal with this political shift. But I wanted to understand is that what is it that the business community really wants from the new government, and where is the potential really which has been unexplored so far?
Nisha, West Bengal's strategic advantage lies in its location, because West Bengal shares borders with several countries, and it's a gateway of Northeast. Now, to leverage this, we need a clear industrial policy. And before the industrial policy, I think rebuilding the investor confidence with predictable governance will be the first intent and request from the industry. I have few personal anecdotes I can share here. What is important now is a partnership model for the growth mindset. It can be also a PPP model. But if things are not timely renewed, like we have hospitality business, where over 2 years, the leases were not getting renewed. What impacted was the end consumer was suffering. Similarly, we had affordable housing with joint sector, with West Bengal government housing board, but there was no land policy which was clear. As a result, again, the end consumer was getting impacted. So if this can be rebuilt, because in a PPP model, the currency is trust, and these will help to improve and take Bengal forward.
Right. So many aspects there that you mentioned, but Jayanta, I also wanted to understand which are those sectors which are looking to harness the growth immediately, stand to benefit in your view?
Nisha, see, one of the core competence of West Bengal is a cluster of MSME base, which is almost 15 million ready market. And if we can together improve and nurture their Atmanirbharata, or the Swabhiman, which we say in Bengali. And how can we do that? We can do by prioritizing their capex and productive asset creation. And what will help immediately will be those industries where these MSMEs are thriving forward, like say in agriculture, in the value chain, in the logistics, in the mobility, in the leather, in ITCS, in textiles. So these are the fews where the supply chain integration and moving up to the next market with the gateway of enter South Asia, I think that will be impacted.
Right. So many of those sectors, and of course, it's a fertile land, and with agri push also inbuilt into that. But Jayanta, what about Peerless Group, and what is the growth map that you are seeing in financial services in particular? And this is the biggest quasi-consumption story in the country. This sector has gained a lot of momentum.
Yes, Peerless has been India's first Swadeshi NBFC. And over 93 years, we are now charting a growth path to celebrate our centennial by 2032. But immediately for Bengal's Abhyuday, we are investing 1,100 crore in our consumer-facing businesses, namely healthcare, hospitality, and real estate. What will happen is by 2030, 5,000 more direct employment will be created in Bengal. And with Peerless Giving, which is our CSR program, at least in 10 states of West Bengal, first generation learners will, their supplementary education and holistic development will be leveraged through our CSR program.
Okay, well said, Jayanto, and all the best for that, and looking forward to that optimistic turn of events. And of course, Bangaler Abhyuday that you mentioned, Bhalo Theko, thank you so much for joining us.
Thank you.
Thank you.
Namaskar.
Namaskar. All right, with that, we come to the end of Profit 360. Thank you so much for tuning in, but keep it with NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna.
Hello and welcome back to NDTV Profit. You're watching KYC or Know Your Company. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and get perspective on that one company today. It's also very buzzing in trade on the back of its quarterly results. So very timely in that sense. And I'm talking about KEI Industries. Now, for the wires and cable space, it's been a very interesting time frame because of copper price volatility. So do stay tuned for the management interview as well. But very importantly, first, just to give you some perspective about where KEI started from and where it has got itself to at this point of time. Founded in 1968, company went public in 1992 and now has become the second largest cables and wire company in India. Now we've seen that over the years the company has of course commanded over a 9% share in India's cable and wire segment. It's gotten both industrial as well as the retail side of things, but supplies to infrastructure, power industry as well as the real estate and exports, which is now a very high growth strategy for the company. You've also seen that the company's pan-India presence has been growing as well as global presence have been going with over 60 plus countries now to where it exports to. Growth continues to be one of the higher ones in the export market with higher margins as well. So that share continues to be important. In terms of revenue mix, of course, majority is coming in from the cables and wire space, while they also have EPC and stainless steel wire. But we continue to focus on the cables and wire space as of now on the revenue mix. Now, very interestingly though, in terms of what we've seen in retail as well as the institutional side of things is where there's been quite an even split at this point of time. Now, when you look at the institutional side, they will be working with real estate players, they'll be working with power companies, and hence that is a slightly more stable business because the demand is quite subjective. Retail requires you to go on the ground, build that relationship with distributors, more sticky also in that sense, and hence both those verticals continue to be very important for the company at this point of time. But we will be, of course, speaking to Anil Gupta today on all of these key parameters. But let's look at what we'll be focusing on across the key bunch of results. Of course, the first one is income statement. As you must have watched on the show. Balance sheet, cash flow and return ratios. Now these are very, very important metrics, especially for KEI, which has seen a stupendous growth over the last 3 to 4 years. But there are some key aspects to watch in terms of future outlook. Shareholding, street cred, valuation, as well as what analysts make of it are some of the other parameters that we'll be focusing on. But a lot of goodness that the company has done will be visible in these parameters, but you also have to watch out for the future as well. But income statement coming up first, because FY26 numbers have been quite strong for the company. Revenue has jumped from almost 8,000 crores to 11,000 odd crores in terms of the last 3-year performance. Margins, if you see, have been largely stable, but seeing a slight downtick. So it's recovered from the lows which we saw from FY25 levels, recovered back to that 10.5 mark, but we'll get some perspective from the management. Net profit also inched up from 581 crores and has done very well in this particular year by itself. When you look at quarter 4, it was a strong quarter for the company, 3,400 odd crores in terms of revenues, a 19% jump. But when you look at the EBITDA as well as the profitability, here is where the meat has come in terms of the growth. They've also done 12.2% margins in quarter 4. This is the highest that the company has done ever in one particular quarter. And hence, we've given this a neutral rating only because of purely what the company has done in terms of the yearly revenue. So, quarter 4 margins helped it to get to 10.5, but still away from that FY24 level. We're being very, very stringent on these parameters as of now, but a neutral rating for the company at this point of time. Balance sheet is the other one. Now, over the last couple of years, you must have seen that the other equity reserves have almost doubled. So from 3,000 odd crores to 6,600 crores now. This has been a very strong number for the company. Book value is also increased substantially, but the borrowing number has vanished away. So the company has paid through its borrowings over the last couple of years. Long-term borrowings have now gone through and payment is quite done. And hence the cash at bank has also seen a big, meaningful jump in the particular quarter as well. When you look at the cash flow also, that is the other key parameter. So balance sheet, of course, gets a big thumbs up right now at this point of time. But when you look at the cash flow, last year there was one of the key concerns because of higher capex. Cash flow from operations was the other key factor that got impacted. So you did see that dip to almost just 32 crores from over 600 crores. But FY26 picture has changed yet again back to those strong numbers of 840 crores. Profits also have been subsequently seen in the last slide as well for income statement, and hence the operations to PAT is now back to a very, very meaningful level compared to last year. Net cash flow also continues to be quite strong and stable at this point of time at almost 400 odd crores, and hence a big thumbs up to the company at this point of time on this metric as well. Return ratios are the other key factors. Now, the company has been in a capex cycle. So you saw the return ratios dip in the last year for the company at this point of time. Used to be quite stable at the 24 to 25% mark over the last FY22 to FY23 level. But the important factor here to note is that they have another plant coming up in Sanand, which was expected to come and start from this quarter itself. Some more commentary when we speak to the management today on this aspect. And hence, return ratios will have to be monitored at this point of time. Hence, we've given this kind of like a neutral rating at this point of time. A similar return ratio picture seen across the level. Used to be at 17 to 18%, but then has come down at this point of time. So, a neutral rating for now on this one. Shareholding, very, very stable for the company. You have associated that with the stability that Anil Gupta offers to shareholders at this point of time. There was that selling in March 25, which led to the company's share splitting to almost 35% at this point of time. But largely, we've seen consistently that the shareholding has been stable. Foreign investors reduced their stake to March 25 levels to almost 25%. Some being brought in and built up yet again in this year as we go into another year for the company. DIs have also plowed into at this point of time wherever there has been a reduction, while the retail investors have actually sold off and reduced some of their stake in the company. So we're seeing a very, very interesting picture here where DIs have actually done over the last 2 years, invested heavily in the company, increased their stake to the highest over the last 5 years. For investors starting to build that position. But retail investors who generally are quite shrewd with their investments, they've seen the street credit, and we'll get to that in just a bit, taken some money off the table at the end of this quarter. But as I talk about the street credit, there are a couple of key things to watch out for. You've seen the 6-month performance of the company being quite healthy at almost 22%, but there are some caveats. First one being that there has been copper price volatility. So that has helped the revenue grow faster. In terms of margins, that generally has a lag of a couple of quarters. So the copper prices which have grown in quarter 2, quarter 3 and quarter 4, some margin lag would have been seen as well. But that's one of the key reasons why the revenue growth has been much faster, and it's visible in the 6-month performance. Year to date also very stable. The 1-year performance up 62%. So valuations, and we'll get to that in just a bit, are pricey at this point of time. The 5-year return also has been quite stupendous. So it's gone through a very big re-rating cycle in that sense. And this 840% definitely trumps the other key players and the growth that we've seen also at this point of time for all these companies. But as we speak about valuations, here's the interesting picture. KEI Industries has been essentially there for quite a bit, but Polycab always used to command a higher valuations versus the other peers. Now you've seen that essentially reverse for the company given the strong 62% up move for KEI Industries. Now trades at 44 times for FY27 price to earnings. Interestingly, Polycab also expected to report strong results in this quarter, is at 39 times price to earnings. RR Kabel saw very strong results in quarter 4. You saw the stock up almost 12% in this week itself, is now at 33 times price to earnings, while you have players like Finolex Cables who generally trades at the lower valuation at 21, and Havels, which had a disappointing quarter largely because of the AC side of the business, because of Lloyd, and the consumer discretionary durable side of business, is now trading at 42 times. So a lot of the positives now priced in for this particular metric, for this particular valuation metric at this point of time for KEI, but the commentary will be very crucial and we'll get to that as well. But for now, we've given this a thumbs down, given what we've seen in terms of the pricing as well. Analyst stake is the other one. Now we is yet to get the company to get all the analyst stakes in. There has been a couple of interesting ones because Morgan Stanley has now downgraded the stock just today morning itself. But 18 analysts continue to maintain a buy. But you look at the likely return potential, that's quite negative at just 2.5%. So analyst call is yet to happen. So we'll get a lot more reports for the company tomorrow. But important to get you the perspective directly right here on NDTV Profit from the management itself. So let's go across, look at the other rating parameters and get a final count as well. Because this, of course, it's a neutral rating at this point of time. But in terms of income statement, we've given the company a rating as well as on the balance sheet. Income statement, of course, is a neutral rating, balance sheet and cash flow. It's been a very, very stark difference that's very visible in the company over FY25 and into FY26. Both those metrics get a thumbs up. Return ratios, the Sanand plan will be something to watch and hence a neutral rating for now. Shareholding, very stable. But the street cred and the analyst stake we just spoke about will be something to watch in the future. Valuations only because of being 44 times in terms of price to earnings for a business growing at 20% will be something to watch, especially at this point of time given the volatility